possible.
We had the Undersecretary of Acquisitions and Sustainment for the Pentagon, Mike Duffy, on the show yesterday. He actually name dropped Castellian when he was talking about, this need to get more missiles and munitions productions online, open the aperture in terms of who the Defense Department is working with and what those types of deals look like moving forward. To your thoughts?
Yes, I think the administration and the department are trying to clear the hurdles for new entrants such as ourselves by dropping some of the more bureaucratic processes. They're also clearing the way for testing, which is super important to the model I just spoke about. And they're making sure that funding flows to the new entrants, which is really important to get these large Wall Street names behind us.
Well, and that's exactly where I was going to go with you. The fact that we are seeing, a growing cadre of blue chip Wall Street names. It's not just in the venture world either. I mean, case in point, Todd Combs from JP Morgan now being involved in this funding round in a very meaningful way. How does it speak to investor appetite, growing investor appetite for this sector in a company like Castellian?
Well, I think it's a really exciting time for America. We're talking about reindustrialization. We're, of course, working on defensive manufacturing. But really, it's the strength of our business. So we have over $500 million in contracts in the past 18 months, with more on the way. We're integrating to 2 major weapons platforms, F-18 with the Navy, HIMARS for the Army. And because of that, we ran a competitive process. We were able to select some of the best investors in the United States. We've got the world's largest bank, JP Morgan. We have Andreessen Horowitz, who shows that we have, venture-style returns that we can provide. And then we have Carlyle, who's been a, top backer of aerospace startups for decades.
You're also a SpaceX alum, and so are your co-founders here. So in terms of what investors need to understand about the street cred that brings when it comes to building hardware?
Well, it's really to that point I made about getting back to the basics of the Apollo era, of looking at your supply chain, making sure to take into account that your design for what you are building is sourceable, and to make sure that you have dual sources of supply, about vertical integration so that you can build the systems and iterate on them within a reasonable time frame, and then to do all that in a process that produces really complex systems at an affordable price in a time frame of relevance. And so we're bringing that to the missile market, which is what's so exciting.
Yeah, okay. You're gonna pardon my divergence here, but given the fact that you do have those SpaceX roots, we are seeing another lockup expiration for stock today, and you and I haven't spoken since that company's gone public. Want to get your thoughts on all of it?
I'm really excited. Over half of our company is former SpaceX, so I fear whenever it goes down, because we probably lose productivity with people looking at the stock ticker. But
do you think people are selling, though? Do you think insiders are selling?
I know some folks are selling. I mean, they've held on for a very long time. They've taken tremendous risk, and it's meaningful money for folks, and this allows them to go buy a house, buy a car, and I'm really excited for them, and as well as like my friends still at SpaceX. For me personally, it was exciting to be able to actually take the gains I made at SpaceX, both with knowledge, but also with the stock, to fund Castellian at the start.
All right. Brian Hargis of Castellian, it's great to have you here on set.
No, thank you.
Well, a lot more to come here on Morning Call, including we're bracing for Walmart. We get those results set to cross before the open, so just in a short while. What the options market is signaling about the potential stock reaction. We've got that and much more when Morning Call returns. by year end, you're talking about 4.9 billion shares of SpaceX that will be available to trade, or roughly 70% of the stock that is not held by Elon Musk. Now, this on the heels of a Bloomberg report yesterday that SpaceX attempted to acquire AI coding startup Cognition. The report that Cognition's CEO quickly denied. SpaceX closed its $60 billion acquisition of Cursor, this is another AI coding startup, last week. SpaceX has not responded to requests for comment, but SpaceX stock is up about 28% since hitting its lows right before earnings at the beginning of the month.
And
fell below 105.
Keep
Meanwhile,
it.
investors preparing for
That's what you
Walmart
do.
results. Those are out before the open. The stock is down more than 10% since its latest results. And our next guest says options markets are pointing to a big move in the stock once earnings cross. And you can see shares are popping about 1% here pre-market ahead of that. Brent Kachuba is the founder of Spot Gamma, which analyzes options flows. It's here on set. It's great to have you on the show. Welcome, welcome. Let's start with Walmart.
Yeah, nice job on the last
Walmart.
name, by the way. You got it. So.
Yes.
Yeah, so with Walmart, it's interesting. It's a 4.5% implied move for earnings today, which is pretty typical of the stock. Target last night, they reported good earnings. They're up 4.2% last time I checked, so a good pulse there. And now Walmart has missed 4 out of the last 5 earnings, so they've had negative reaction, is what is typical. And I think what is different this time about earnings is that the stock has a bullish lean in the options market. We call this a call skew. And so investors are looking for a pop here, or at least the option traders are looking for a pop in the stock here. And that's a bit different because in May, as you mentioned before, there was a bearish lean in the options market and the stock actually dropped 7% after that May earnings report. So a different tone here this morning, and options market is definitely looking a little more bullish, I would say, into this earnings report.
Okay, cool. We'll have to see what we got the print here in just a short while. In the meantime, we just talked about SpaceX. I do want to get your thoughts on what we're seeing there.
Yeah, there's the 300 million share lockup, as you alluded to today. And I think the key thing here is to reiterate that these are shares that are becoming available to trade. They're not new shares, so it's not dilutive. And there's a lot of talk about the 9 million shares from earlier this month. And actually the stock, as you mentioned before, it made its all-time low on August 5th. That bigger lockup was August 6th. And so the stock's just traded up since then. And a lot of people were nervous that new supply would keep the price down, but it's not. It's actually the stock has done pretty well. Now, the key thing to watch from the options market is that 150 level. That's a key resistance line because when we see that stock move up that level, option shares have been selling calls at or above that strike, that 150 area. And so that we see as a key kind of resistance or ceiling level at this point.
Interesting. Every time the stock's tried to breach it, it's bounced back lower again, to your point. Okay, I do want to talk about what else we're seeing in the market more broadly here. Let's start with VIX expiration, because there's been some chatter that this has this dynamic has potentially tamped down some of the volatility and some of the demand we've seen.
Yeah, and if you were to just look at a chart of the VIX over time, you can actually mark the lows in the VIX at expiration, which was yesterday. So yesterday, 40% of VIX contracts expired. And the argument there is that the contracts reduce volatility because traders are selling VIX or selling volatility into these expirations, and that helps to support stock and kind of keeps volatility quiet. And then expiration positions unwind, which allows volatility to expand. It's kind of like breathing in and out a little bit. And so what's kind of key about this is that the VIX expiration happens yesterday, tomorrow's options expiration. And so you're allowing the market to potentially move a bit more now with some really big events next week. We have PCE, core PCE next week. We have NVIDIA earnings next week, and of course, Jackson Hole. And so the timing of volatility sort of start to expand with positions rolling off yesterday and a bunch of these events next week, I think is really critical for investors to take note of.
Okay, a lot here going into the final week of trading for August next week. No summer slowdown here.
That's right.
Shuba, great to have you on.
Thank you so much.
Well, straight ahead, we've got the morning call crew teeing up the trading day ahead. Welcome back. Alibaba results are out, and shares are lower, about 4% right now. The China-based e-commerce giant saw revenue come in above analyst estimates, but the bottom line was slightly short of forecasts. Baba did say that growth in cloud revenue accelerated 45%, and AI-related product revenue grew at a triple-digit pace for the 12th consecutive quarter. Kind of a similar dynamic, arguably, to what we saw with Baidu when they reported earlier this week as well. That acceleration in cloud and AI. Well, time for your call sheet, where we look at the topics driving the trading day ahead. Crew members today: Jay Woods of Freedom Capital Markets, Hardika Singh of Fundstrat, and Stephanie Link of Hightower. Jay and Stephanie are both CNBC contributors. All right, I keep waiting for summer slowdown. We're not getting it. So, of course, I'm going to start right there with, and Jay, I'm going to put this to you. The Treasury announcement we got yesterday, some folks referring to it as Operation Twist. We can, debate how symbolic it is versus actually, fundamentally meaningful to the market. Regardless, big moves in asset classes. What does it mean for the bond market? What does it mean for rates? What does it mean for everything else?
Yeah, well, it's tempered the long end, so that is something that the Trump administration have been watching closely. But I look at it from the equity point of view, from the commodity point of view. Where do you go? Where's the new strength? And we've always looked at Bitcoin, like, where is it correlated to? Gold was going up, Bitcoin was going down. Well, we finally found a correlation, at least for the time being. But Bitcoin technically just broke out. It looks like it's on a run to 77, 80,000. And then gold. When you look at gold and now copper, Freeport-McMoRan individually, on the verge of a major breakout, this is where the strength is. And then, the home builders, for a short-term play, we've got a nice little floor under there. So I like Toll and Lennar in the home building side.
Yeah, you could also argue that this actually lifted Lowe's shares yesterday, despite, print yesterday morning that was not necessarily the best here. It was certainly a little disappointing to compare it against Home Depot. I want to get your thoughts on all of this, Hardika.
I think at the end of the day, it doesn't really change anything, right? I don't see how Besson could continue this buyback going at a greater scale. For starters, $4 billion is not a large amount. And then secondly, I just think that if he wants to continue buying back longer dated bonds, he's going to have to issue more short dated. And that's just going to make this whole growing deficit problem worse. We hit 40 trillion for the US debt yesterday. That's a big round juicy number. And I think that if we have more shorter dated bonds issued, I think that's going to hurt the prices and yields are going to go up. And again, that's just going to keep increasing the deficit. So it fails to solve the underlying problem, which is that the deficit keeps growing and investors are losing hopes that it'll ever get paid back.
Yeah. Stephanie, I want to get your thoughts on this. And yes, $40 trillion, it's a big, alarming, juicy, to use the word Hardika just used, number. How do you take that? How do you take corporate debt issuance? How do you take, what we've seen with the Strait of Hormuz and geopolitics and energy? How you put it all together, and also the role that central banks can or cannot play in all of this when you talk about things like supply shocks. You put it all together, what does it mean? How do you navigate it as an investor right now?
Well, the Treasury is absolutely watching yields between what they did with Japan and then what they did yesterday. And I think they're prepared to do more. That being said, maybe it stabilizes the 10-year and the 30-year temporarily, but it doesn't change the tidal wave of hyperscalers and their issuance of debt, and doesn't change the deficits. It doesn't change the elevated inflation. And I would also add, I think the bond market also, at least the long end was rising, yields were rising because the economic growth is better than expected. And so I think there's a lot of things that are in play in the bond market at this moment in time. What I care about mostly is what is the economy growing at? And right now we're growing something around 4.5% according to the Atlanta Fed tracker. And we know there's an AI boom that's continuing to help the economic growth. The consumer is consuming, as we got data points from Target and Estee Lauder yesterday. Housing is obviously struggling. It will continue to struggle. But I think adding it all up, I think earnings growth is going to continue to grow in the double digits, and that's positive for equities.
What does it mean for Walmart, Jay?
What does it mean for Walmart? We're going to find out in a little while. I think that Target report was unbelievable, and I think that's more a testament to what the new CEO, Michael Fidelke, has done there. Stock up over 60%. Now, watch 160, 165, major resistance over a long-term base, but that turnaround has been nothing short of spectacular. Walmart is going to give us a real good look into the consumer. TJ Maxx a little disappointing, but Walmart is struggling right now, but near term going into this number. It's been starting to come back. So let's see if it can get back above key levels. 118 is the level I'm watching. If it can recapture that, then maybe we make a run back to the all-time highs. But it will give us more of an idea of what that consumer is doing and how the economy has been affecting them. And so far, we haven't seen any real negative effects.
Yeah, and right now we're trading pre-market here up about 0.5%. I think 114.80 is the level, to your point, in Walmart ahead of this print. The other piece, when we talk about grocery, we talk about consumer with Walmart, the other piece of Walmart is how much it's been spending to deploy AI. I think it's sort of a good early test case of, productivity gains and, how the technology is going to grow tentacles and reach into different parts of different businesses. So in light of that, what should we be looking for when it comes to that? And by the way, I make a similar case for Deere, which is also reporting this morning.
I agree. And I think companies like Walmart, Deere, Caterpillar, they have really been the beneficiaries of this AI boom. And if you take a step back, this is what AI was supposed to do all along. AI was supposed to benefit companies outside of the tech industry as well. And I think with Walmart, they have just really benefited from this K-shaped economy, where we have this lessening middle class, and then we have lower income class that is looking to spend more and more, or even higher income consumers who are flocking to Walmart for its deals. Whereas in Target's case, for example, I'm just not sure who their consumer base is. So their stock coming back up is potentially reflecting this middle class that's coming back to spending on discretionary goods. With Deere's case, I think that it's a great manufacturing boom at the end of the day, and it's reflective of this data center boom that we're seeing across the country play out.
Yeah. Okay. Deere, Walmart, also SpaceX with another lockup expiration today. We got 30 seconds. Stephanie.
I like SpaceX. I would be buying it on weakness. I think there's many ways that they can win. It's either AI, it's connectivity, it's space. The last quarter was phenomenal. So it's, I think for the long term, I think you want to be buying it.
All right. Look at that. We're on time. Thank you to our call crew. Appreciate it. And if we take a check at futures right now, I believe it's a mixed picture here, although, yeah, it's a mixed picture. S&P and Dow pointed poised to open lower, the NASDAQ slightly higher. Thank you to our morning call crew, and Squawk Box starts now.
Good morning. President Trump shifting his threats on Iran from military back to economic, saying the country is in for an economic D-Day. Meantime, the U.S. is said to be secretly guiding oil tankers through the Strait of Hormuz to bring millions, of barrels of crude to the market. And retail earnings roll on. We're expecting second quarter numbers from industry bellwether Walmart. It's Thursday, August 20th, 2026, and Squawk Box begins right now. Good morning and welcome to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Kelly Evans. Joe and Becky are off today. U.S. equity futures at this hour, as Morgan mentioned, a little bit of a mixed picture. We see the Dow dropping about 100 points, the S&P down 6, the NASDAQ rising, though. Take a look across the other parts of the markets, like energy, where we can see there the reaction in oil prices, or lack thereof, a little bit. WTI up nearly 3% after the president's threats about economic action against Iran. Brent 94 up 2.5%. RBOB gasoline down a bit. Nat gas too. For Treasury yields, again, here's a focus. Yesterday, after that big announcement from the Treasury, we saw the 10-year yield decline about 4 basis points on the session. 467 today, so a slight uptick there. The 2-year 418, let's call it. The 30-year 522. Bitcoin, Ether, and other cryptocurrencies were certainly jumping after the president he urged Congress to pass the Clarity Act and after the actions by Treasury yesterday. But on the Clarity Act front, Bitcoin is now across 70 to 71,000, another 5% this morning. Ether, 8.5, Solana, Ripple. For those who are following, those are jumping as well. We'll talk more about it with Coinbase CEO Brian Armstrong at around 8:40 a.m. Eastern. President Trump announcing he's ramping up economic pressure on Iran. In a Truth Social post, the president called the move an economic D-Day. And in his words, quote, the most crushing economic operation ever taken against any country. He said, I am also announcing that any country that allows its financial institutions, businesses, airports, or government entities to provide any type of lifeline to Iran will itself face tremendous economic consequences. Now, Iran's foreign minister rejected the president's threat, calling it a diversion from America's own mounting debt problem and rising interest costs. And the U.S. military has reportedly set up a shipping lane along the coast of Oman and is helping guide oil tankers into and out of the Persian Gulf through the Strait of Hormuz. An Axios report says in recent weeks, 15 to 20 tankers have entered and exited the strait each night, bringing about 10 to 20 million barrels of crude oil to the market daily. If you've been wondering, as many of us have, why the oil price is so well behaved during this time. According to the Axios report, the military has been helping the ships enter the strait in one big line to pick up oil and exit in another big line. Prior to the Iran war, remember, about 20% of the world's daily oil supply moved through the Strait of Hormuz, Andrew.
It's pretty crazy.
Yeah.
We are at a pretty crazy time.
But that's significant. I mean, that much oil on the market is a big deal. Potential progress also being made on a tariff standoff between the United States and Canada. Reports say the U.S. is considering lowering tariffs on Canadian steel and aluminum exports to 25% from 50% and cutting car tariffs to 15% from 25%. The developments follow President Trump's announcement Tuesday night that he was pausing tariffs for 3 days. Yesterday on X, Canadian Prime Minister Mark Carney said there had been, in his words, significant progress in trade negotiation.
And then there's this. We got to talk about this because this is the story. U.S. government debt climbing above $40 trillion. That's according to the Treasury Department. Meanwhile, years of escalating budget deficits, as you know, juiced by government stimulus during COVID, have caused ever more government red ink. 10 years ago, public debt was about half of what it is now. U.S. finances are $1.8 trillion in the hole so far this year. And then, of course, there is the Bessent move about what to do about our debt. And there's so many people who seem to have so many views. Some people who think he's Alexander Hamilton and this is genius. Other people who think that this is ruinous.
Right.
And I actually am not sure I have come up with a view yet.
Well, let's put it this way. If you were in his position, you could understand why he's doing what he's doing, because in some ways his job is to try to keep, yields down, so that's fine. Will it work?
Well, and this is the question.
I don't know. Not a big reaction in the markets.
Famously a trader. That's what he's done.
Yeah.
And this is a trade move of sorts. By the way, people have done things like this. You go back.
It started with
in
Yellen.
history. Well, actually, when I went back and looked, Larry Summers
because we were running
doing
surpluses.
some of this
Yes, at the time.
Back at the beginning of the century, because we were running surpluses.
Yes.
I shouldn't say the beginning of the century. I say the beginning of 1990. I want to say in the 90s.
Probably turn of the century. That's when we started.
Was
to
that
see
when?
Yeah, I think so. Yeah.
Because we started to see that the deficit was actually getting better, and there was a worry about just the liquidity in the marketplace on the other end.
Yeah.
So it is fascinating, but.
Unfortunately, now this is under very different circumstances. And again, when Yellen, if you go back and look, maybe we can quickly show the 10-year yield going back to sort of been the end of 23, maybe the beginning of 24. So maybe they announced it in November of 23.
Right.
They were going to do this, and you saw a drop in the 10-year yield all the way. They implemented it starting in May of the following year. And we went from, it made a difference. So then it's been taken up in various times since then. And look, again, it's undeniable that by shifting, well, all they're doing is they're going to retire, buy back the longer term debt, issue to match the, they're issuing shorter term debt to replace it. That will make us more vulnerable to moves in interest rates. If that's to the downside, great. If it's to the upside.
Well, and that's the question. But it seems like in this moment, that this is like trading a 30-year mortgage at a decent rate for a 5-year ARM. That might
maybe
look
a 90-day ARM.
Right, that might look better in this moment, but when the ARM part starts, things get complicated.
This is why those who would defend it makes a certain amount of sense. Because from a pure taxpayer trade, fine, it saves money. But if it backfires, because we're papering over the real problems, and I thought the whole point of Warsh's Fed was to let yields go to their long-term kind of resting point in order to force kind of the fiscal discipline.
We'll discuss a lot more of this. We've got 3 more hours of conversation pretty much about this topic. We're basically doing a special on this. But President Trump also calling on Congress to lay out clear-cut rules for the crypto industry at a White House gathering that included the CEOs of Coinbase, Robinhood, and others. The president saying lawmakers should pass the Clarity Act, which would define which types of cryptocurrencies are securities and which are commodities. It would also delineate who's in charge of regulating crypto. We should give a shout out to Adina Friedman there from the NASDAQ, also on the screen. The legislation currently stalled in the Senate, though. One potential stumbling block: lawmakers were nervous about President Trump profiting off of his crypto ventures. And we're going to speak with Coinbase CEO Brian Armstrong in today's 8 a.m. hour all about this. So it's a conversation you do not want to miss.
And then there was this: the Fed eyeing possible interest rate hikes as it monitors the price of U.S. goods. This was in the release of the minutes yesterday from the central bank's meeting last month. Officials said they would need to raise rates soon unless they saw more progress on bringing down inflation. A summary of the meeting stated that some participants commented that financial conditions might not currently be sufficiently restrictive to facilitate a return of inflation to 2%. The Fed voted 9-3 to keep the federal funds rate steady. The minutes noted last month's dissenters wanted a 0.25 percentage point rate hike and said they judged that doing so, quote, would likely help forestall the need for a steeper and potentially more costly sequence of tightening moves at a later stage.
A little color to add to this. You know, I was out at this Aspen Economic Group summit that took place a couple weeks ago, and there were a whole number of FOMC members there. You might remember Neel Kashkari came on our air, along with a whole bunch of Treasury secretaries as well. And this was right as this had just happened. And you could tell just in the air, without giving away sources or what have you, that there was much more dissension on the board than just those three. That there was a much greater view to increase interest rates. And I was trying to get some of those people to sort of say that on the air. They wouldn't, but what I'm suggesting is that there seemed to, and I think part of it is that, you know, Kevin Warsh got into this job, has the mandate, public mandate that he's at least discussed publicly, there's a little bit of a honeymoon period, I think, for him, in that there were, I think, some people who might have even been willing or wanting to vote for higher rates last time and felt like, you know,
we'll give him another meeting.
We're gonna wait this out a little bit.
Yeah.
So I think it's going to be just very interesting to see how quickly things turn. And I think, by the way, they are waiting for the data. They're all praying for the data to turn to be in a positive direction, so they don't have to.
Well, he's got pressure on both sides now because the president pushing again on lower rates. The rest of the committee may be pushing for higher. Did you see also? They might pare back the number of meetings. I'm curious to talk to our guests about today, but. I think from 8 to 6, like Rebecca Patterson was saying yesterday, as long as it's at least 6, they don't need to go to Congress. I do not like fewer Fed meetings. And this is why I want people's point of view on this, but it seems to me that it'd be better to let the funds rate move around a little bit more than to leave it pegged at whatever it's pegged at for a longer period of time. That's just me. I don't know. That
Look, my sense of it, and I was sort of actually persuaded out in Aspen about this, is that you could put 6 on the books, and you could always do 8. You could always do 9.
But if you have an intermeeting, the bar is so high.
Yes, if you do have if you have an extra meeting, that's also typically a problem.
Yes.
A lot more to come on that and more. We're going to go inside the U.S. bond rout that's being felt across the globe. The U.S. Treasury is attempting to bring down yields. A top fixed income portfolio manager from J.P. Morgan is going to join us next. We're going to get into all of this to really dig into what's going on. And ahead of all that, we are paying attention to shares of Walmart because second quarter results due out from the retail giant. That's happening at 7 a.m. Eastern time. We've got a big morning, folks. We're going to bring you those numbers and analysis. Do not go anywhere. Squawk Box rolling on after this.
Welcome back this morning, and let's focus in again on Treasury yields. 467 is the 10-year this morning. We pulled back a little bit yesterday after the Treasury Department said it would increase the size of its government debt repurchases. For her insights on the bond market action and on the Fed minutes, let's bring in Kelsey Barrow, fixed income portfolio manager at JP Morgan Asset Management. It's great to see you, Kelsey, again. What happens when announcements like this come down for you? Are you just like, how big of a deal is this?
So it was a surprise. So to take a step back, typically what happens when the Treasury wants to make a change, either to their issuance program or their buyback program, they're going to make that announcement at a quarterly refunding. We just had a quarterly refunding in August. We don't have another one until November. So no one was coming in and saying, this is something that was on our bingo cards. Now, that being said, there has been a lot of talk over the last few weeks about what could possibly stabilize the long end of the yield curve.
Because everyone's watching the 30-year go to 533. Again, not that the 30-year is like the most important thing in the world, but it just tells you where, things are getting a little illiquid.
Right, exactly. And so I would say, so the way that these buybacks work is there's really two purposes that have been stated: cash management and liquidity support. This was under the guise of liquidity support, but really we weren't seeing a lot of liquidity issues within the bond market. We're seeing a material repricing higher in long end yield that's been happening, I would say, fairly gradually over a number of weeks and months, not necessarily liquidity concerns.
People just don't want to own it at these levels.
What it signals is that the Treasury is looking at the yield level. That's obviously what is influencing that decision. So I think what we need to do is we need to think about what got us to these yield levels and what could the catalyst be to stabilize yields, and will this announcement from the Treasury be enough to stabilize yields? As it relates to what drove us here, I don't think that it should be lost on people that what really started this regime shift was the war in Iran. It was the closure of the Strait. It changed the risks and the balance of risks around inflation. Now, even this morning, I've been looking at oil prices, and they're actually starting to climb higher again. So we're not out of the woods from that situation. The other thing that has changed over the summer is we got a new Fed chair. And this would be a difficult environment for anyone, even if we had continuity in leadership, but we haven't. We have a new Fed chair. The market is still understanding what his reaction function is, and that has also injected a lot of term premium into the market. Now,
Do you think there's term premium? So I'm surprised by.
So I would say yes for term premium, and there are a couple reasons why. When you look at the repricing, a few things really stand out to me. One, inflation expectations remain extremely well anchored. So this move higher really hasn't been, at least according to the bond market pricing, a fear around runaway inflation. The second thing is the pricing of the terminal rate. So how high the Fed funds rate is going to get in this cycle, that has actually stayed fairly stable. So if the market was really sending a signal that the economy was overheating, the Fed policy rate was in the completely wrong place, I would expect market pricing of the terminal rate to come up a lot. That's why when you eliminate those two things, you get to this term premium type of discussion that we're having. Now, how do you stabilize yields, right?
Well,
I heard you guys.
How would you, by the way, explain what to me? When I think of term premium, I think as people don't want to hold this stuff, as much as they. Okay, how would you explain it in sort of lay terms?
I mean, I think that's fair. What you're getting at, in essence, is the additional compensation that investors require to hold longer dated bonds. And it's that additional compensation. Why do you need that additional compensation? Well, there's a variety of factors. It could be the uncertainty around the geopolitical environment. It could be the uncertainty around the Fed framework. It could be the deficits, the corporate supply. Term premium can incorporate a lot of different things.
It's because we have so much issuance of AI debt that people don't want to own long-term treasuries. I'm not sure that I buy that, but that may be the case. I don't know. In which case, this is a totally different discussion than anything that has to do with the deficit.
So one thing that is different, I would say, about this move higher in yields relative to last year around Liberation Day is that when these yields are moving higher, you're seeing incremental demand within the fixed income market. So people are looking at these higher yields and they're saying, actually, these are attractive. So the flows are continuing to be
Right.
positive within fixed income. And that is something that is different from last year when you saw a lot of concerns around
Sell
Sell
America,
America and the dollar debasement trade. This is a bit of a different flavor, and it has to do with the fact that the underlying growth fundamentals of the U.S. economy have been very strong. We just got through an earnings
Right.
season where people really couldn't poke holes in the results that we got from corporate America.
So when you look at this situation and what the administration announced yesterday, long term, do you think that this instills confidence because you say to yourself, we've got a great Treasury Secretary who is a trader with expertise, who's going to manage our bills better? Or do you say this is a administration, and I don't know if it's an administration, but you can take the politics out of it, but we are now in a situation where we are involved and engaged in financial engineering, and that not only is not going to instill confidence, that it is going to undermine confidence longer term?
So the Treasury has a set of tools in their toolkit. This is not a new tool. They've been doing buybacks since 2024. They've opened the door to do more, I think, in a way that can instill some near-term stability. But ultimately, these yields or lower yields can't be sustained unless it's supported by the fundamentals. And that's why you have to get back to what is the trend for growth, what is the trend for inflation, what is the framework for the Federal Reserve. That's what's going to ultimately drive yields. And if you look at October 2023 and that period of time where you had the move higher in yields, the Treasury stepped in. It wasn't just the Treasury. It was also the fact that the data came in softer, the Fed shifted their communication. It's never just one thing.
Yeah, you need a long. Let me ask you before we go quickly. What is your theory or philosophy of Fed funds rates move? I think it'd be nice for the Fed funds rate to move a little bit more, up and down. That this is a pipe dream. Maybe it's silly. But I ask because if there's fewer Fed meetings and the Fed funds rate is left where it is for longer periods of time, even just a couple weeks here and there, is that a big deal to you? Is that appropriate?
So I noticed that in the FOMC minutes, which also came out yesterday, but they really felt like a sideshow, to be fair. All of the price action came on the Treasury announcement. It didn't come on the FOMC meeting minutes. I would say the 8 meetings make sense to me. If you remove some of them, the current structure makes sense to me. If you remove some of them, the market's still going to want information between meetings, and instead they'll listen to whoever will speak in between.
Kelsey, really appreciate it. Thanks. We'll check back. It's so eventful for a fixed income strategist. Kelsey Barrow.
Coming up, President Trump weighing in on the data center boom that's seeing facilities pop up around the country. One of the reasons that some people are saying so much money might be moving there instead of treasuries. Another part of that debate. We're going to bring you the president's remarks after the break. Welcome back to Squawk Box. President Trump weighing in on data centers being built across the country. The facilities have sparked intense debate in communities worried about tech companies using local resources and causing potential electricity price spikes. Here's what the president said yesterday about it.
We're building the biggest plants anywhere in the world. And I can say if I were the mayor of a town or the governor of a state and I had a chance to get a big plant in, an AI plant or a data center, I would absolutely want it because the jobs are enormous and the money paid, the taxes paid are just enormous. And if you don't take it, you're going to be left behind because there are plenty of places that want it.
We're going to talk a lot more about the politics of data centers and the potential impact on the midterm elections with well-known pollster Frank Luntz in the next hour.
A lot to ask
A lot to talk to him about,
including the polls in the Midwest. So anyway, we're watching Merck and Moderna after those positive initial trial results for their experimental cancer vaccine. That caused shares of Moderna to soar yesterday. 177% higher is where it ended the day. Meanwhile, Merck, a Dow component, was up 12.5%. The mRNA-based shot, in combination with Merck's immunotherapy called Keytruda, met key goals in a trial of patients with higher risk or advanced melanoma, whose detectable cancer had been removed through surgery. We'll talk more about this with an analyst in the next half hour, but finally, just such a great feel-good story. No one come up with a bad thing to say about this, just all good news. Coming up, President Trump threatening Iran with economic ruin as the war with that country nears 6 months in length. We'll have more after a break, but first, a look at yesterday's S&P 500 winners and losers. Good morning and welcome back to Squawk Box. We are live here at the NASDAQ market site in Times Square. Checking the futures, a bit of red on the screen this morning. Dow was down triple digits, now down 74. S&P only down a couple points. The NASDAQ, Andrew, still in the green, about a 46-point gain.
Meantime, President Trump threatening Iran with an economic D-Day. Eamon Javers joins us with the latest on that. Good morning, Eamon.
Yeah, good morning to you, Andrew. President Trump declared economic warfare on Iran last night, vowing to wage a financial campaign against the Islamic Republic as he seeks to break that country's efforts to control the Strait of Hormuz. No one has given the Islamic Republic of Iran a greater opportunity, he said, to make a deal than me. Tragically for them, they have failed to take it. Therefore, today I am announcing the most crushing economic operation ever taken against any country. This will be economic warfare and isolation on an unprecedented scale. Their navy is gone, their air force is destroyed, their military factories are now rubble, their currency is worthless, and their country is hanging by a thread. Today, I am also announcing that any country that allows its financial institutions, businesses, airports, or government entities to provide any type of lifeline to Iran will itself face tremendous economic consequences. Oil smuggling, swap lines, cash transfers, exchange houses, ship registries, front companies. It all needs to stop now. That's the president on social media last night. Now, the challenge for the president, Andrew, is that Iran already is one of the most heavily sanctioned economies in the world, and it has been for years, and those sanctions have not been enough so far to change the decision-making of Iranian leaders. And we saw a response last night from Iran. Iran's foreign minister had this to say overnight on social media. He said, the so-called economic D-Day is a diversion from America's own crisis. Unprecedented debt and surging interest costs, doubling down on failed policies will only bring further defeat and enmity of Iranians. U.S. economic terrorism threatens global economy and sovereignty worldwide. So, Andrew, some tough words from the Iranians. And in that social media post from the Iranians overnight, they linked to a series of Western media articles about the U.S. soaring debt hitting $40 trillion. So the Iranians are saying, you know, look, if you want to play economic warfare, we can do that too. And of course, the irony in all of this is that the Iranians have largely been waging an economic warfare campaign against the United States for the duration of this war, choking off the Strait of Hormuz. Not really a military or strategic effort. It is an effort to clamp down on the global economy and have economic consequences for the U.S.
Eamon, how much of that link do you think has been made? We just had a bond analyst on the broadcast really talking about interest rates and in particular what Scott Bessent did yesterday in terms of trying to bring down that rate on the long end. And I'm just not sure how much in Washington that conversation is happening, this sort of link between what the war in Iran has done to this economy and how connected these things are.
Yeah, I don't think that conversation is happening in Washington, at least not publicly. Washington is pretty good at putting the blinders on, right? And when it comes particularly to the national debt, both parties have continued to spend when they're in power, even if they rail against spending when they're out of power. The history shows that the spending goes up dramatically each term, no matter who's in power. It's just easier for politicians to spend money and give away goodies to political groups than it is to tighten the reins and disappoint people, right? I mean, if you're a politician, you're campaigning for votes, you don't want to disappoint anybody. The easiest way to do that is to spread the money around. And so as a result, what you don't hear is any real serious effort to deal with the debt and to try to rein in some of these things that are concerning the bond market. The Iran war, a lot of the conversation about the Iran war has been in terms of the depletion of military supplies, missiles and that sort of thing, and some of the impact that the Iranians have had by hitting American supply depots in the Middle East strategically, but not really about the economic cost of this war and whether it's sustainable over the long term. At some point, though, if there is a pain point, Washington will respond. The benefit of being this big global superpower is that there hasn't been a pain point so far, and so they haven't had to respond. At some point, that will be coming if this path, is sustained, and it's going to hurt. for a lot of people.
It's in the bond market, according to our last guest, and that obviously we'll see if that's why we're seeing more pressure come. Eamon, thanks very much for now. Appreciate it. Eamon Jaffers.
You bet.
Coming up, OpenAI scaling back training of its newest AI models as the industry focuses more on security. Meantime, its CFO is updating employees on its IPO plans. We'll talk about it all when Squawk Box comes right back. Welcome back. The private fintech giant Stripe says it plans to acquire OpenRouter. The New York Times put the cost of the deal at $7.5 billion. Less than 3 months ago, OpenRouter raised money at a $1.3 billion valuation. What is OpenRouter? It helps businesses route and optimize AI token usage. It has become more popular with developers looking to use free, non-proprietary AI models. And in many ways, Andrew, represents this whole back and forth between is it Anthropic, is it OpenAI? OpenRouter helps it be all of the above. Fascinating to me that Stripe moved on this yesterday, and that it's Stripe, and they kind of gave an explainer as to why. I'm not sure I fully followed, but something about the singularity in the next phase of the internet.
So this is a fascinating deal. There's a number of companies that are trying to do things like this, like what OpenRouter is. There's a version of it, Ramp, for example.
Made that acquisition last night.
Is trying to effectively use its, Ramp is tracks financials inside enterprise, and they're looking and saying, okay, you're token maxing, you're spending too much.
Right.
You should be using a different model for this kind of question.
Genius, brilliant.
For this so I think there's a whole, by the way, Perplexity on the consumer side, that's kind of what it is trying to do now. It's trying to move you between models depending on the question that you're asking. So the only thing that I can't figure out about all of this, longer term, is whether all of these sort of layers on top of these models will have value, or whether the model makers themselves will somehow do a lot of this.
I imagine it bails out OpenAI to some extent. And again, it sounds like, and we'll talk about this, it sounds like their revenue picking up a little bit, but to the extent that some third party is routing you around to everybody, the only thing I wonder about is where do the Chinese models fit in if they're a little bit cheaper? And that's the only thing I wonder about, Well,
that's going to be a part of it,
Yeah.
right? And then the other piece of it is going to be the memory piece. So there is a big question about how all of these kind of layers deal with memory. You can have your own data sets behind it, but the memory, so every time you ask a particular kind of question, if you're using Anthropic specifically or OpenAI, it's remembering your own preferences. It's learning in the moment as well about what you asked before. It's much more complicated to capture the memory if you're doing it and moving people from model to model.
Yeah, true.
So,
great point.
Meantime, OpenAI's CFO giving employees an update on when the startup may make its highly anticipated debut on the public exchanges. Sources telling CNBC that Sarah Fryer told employees during all hands meeting yesterday the company will be a public company in 2027, but it could also debut sooner if, in her words, our business continues to inflect. OpenAI confidentially filed an IPO prospectus in June, and all of the source checking that I've had suggests sometime early
2027.
In 2027. I have not heard about plans that would get you there that much sooner, unless the Anthropic transaction is so enormous and successful. And as she said, there's sort of such an inflection in the OpenAI business.
That's the place to watch. They've had a terrible, no good week and month, and with the financials, their revenue growth in Q2 versus Anthropic's. But it does sound like in that same town hall, according to Kate's reporting, that she was saying I think their overall revenue growth was running up 35% quarter to date. Enterprise up 50%. That's a much better narrative to tell if you still want to, get out with a strong debut.
Joining us on this and so much more, author of the Sources newsletter, Alex Heath. He spoke at length with OpenAI CEO Sam Altman. You want to weigh in on the IPO story before we get into the Sam of it all?
I think you're spot on, Andrew. I think they go out maybe early next year. Anthropic, I'm hearing September most likely.
And so your sense of what's happening inside of OpenAI, though, right now, in terms of their efforts to try to really ramp the enterprise to compete with Anthropic, where do you think they really are?
I've been spending time inside OpenAI recently. You mentioned I spoke to Sam about their slowdown in research training, which they announced earlier this week. I think they had a pretty great July. I don't think Q1 or Q2 were very good. What happened at the end of June is they released Sol, their latest frontier model.
Right.
And I think that has really gone well for them. And Codex, their coding agent, is also ramping dramatically, as you all reported, to 20 million users from zero less than a year ago. So I think they're on this upswing, but it's very recent.
We were talking about this OpenRouter transaction. Do you think that helps in OpenAI?
It's interesting. I was listening to you guys talk about that. I think enterprises will want to pick models. I really don't know if one model provider is going to win enterprise, especially when you think about the data and provisioning and needing things to respect the boundaries of an enterprise. That's where the routing, I think, makes a lot of sense. I think Anthropic and OpenAI will keep going at their own API businesses, but I have to believe that companies want to control their own destiny. If you think models are essential for building a company, you're going to want to have choice there.
In terms of just the build out, the revenue numbers, OpenAI has made a number of massive commitments to a number of big data centers. Do you look at this and think the maths?
The math is complicated and it's changing rapidly, because another thing that OpenAI especially is doing right now is they're really trying to drive down the cost of delivering tokens. They have their own inference chip going into production later this year. They're trying to invest in the full stack, essentially become their own hyperscaler, like an Amazon or a Google.
And you think that's different than Anthropic?
I don't think Anthropic's there. I think Anthropic's behind OpenAI on those efforts. They're doing their own chip efforts, but they're behind. They've been really focused on coding in the enterprise API business, and OpenAI has been expanding in a lot of different other ways. And it's why the margin profile of Anthropic looks really good right now, because of that focus that they have. But then I think you have a little more optionality long term with all the bets that OpenAI has made.
You know, we had Dylan, who's the CEO of Figma, on the broadcast yesterday, and he made some very positive comments about OpenAI. And he didn't make a dig at Anthropic per se, but we had we were talking about trust, and there's lots of questions and perceptions about trust, and you know, between New Yorker articles and other things that have really tried to place questions around OpenAI, and yet in the Figma case, they had partnered with Anthropic. I think they felt that they were blindsided by a partnership that has gone a little twisted. And I'm curious whether you think that the trust story has changed.
Well, I think the trust story is moving towards the capability of these models and how they're starting to hack things, right? I think the Hugging Face incident, which I think was part of the response we saw from OpenAI earlier this week, which, by the way, I don't think the market has fully internalized what's happening, which is that a frontier lab is intentionally slowing down frontier training. It's like if Mercedes said we're going to stop making cars for a while. That's what happened earlier this week. And so the trust is moving to this layer of, can we actually secure the capabilities of these models as we continue to invest in them? I mean, Sam Altman told me they're seeing, quote, various degrees of misalignment in their frontier models that they're developing, and so they had to pause.
But Alex, so what does that mean, though? So A, if they're pausing, does that have an implication for data center build-outs? We haven't heard Anthropic say they're pausing. I don't think XAI or Meta says they're pausing. Now, maybe they're not in the same place. I don't know. But what does it mean longer term? And could an OpenAI slow down, get some, and I don't know if you get credit for slowing down, but meanwhile Anthropic doesn't, and that hurts them in the marketplace?
I think at worst, it suggests maybe Anthropic's reckless and they're not focusing now on safety, even though they're the quote-unquote safety AI company, right? Like OpenAI is, which I have to imagine. I don't think it's the first intention, but I think it's a nice byproduct of this decision, is that it casts that doubt on Anthropic ahead of an IPO. And at best, it maybe just suggests that Anthropic doesn't have the capabilities that OpenAI has if Anthropic doesn't need to slow down. So look, I think this was a very research team-led effort at OpenAI. Again, I've been spending a lot of time there.
Right.
And I think the researchers are genuinely freaking out at what they're seeing, which is the capabilities of these models progressing and not being able to contain them. But at the same time, yeah, it's a wrinkle, I would say, as Anthropic's about to go out, given Anthropic's position in the market.
I got one final question that's maybe unrelated to both of those companies, but very much in the AI space, which is you also have been covering very heavily Meta. And we oftentimes think about Meta and what Mark Zuckerberg's doing as quote unquote behind, just in terms of the race. And yet, you know, it's a public company. We have a lot of folks who are watching us right now who can already invest in that company, trying to understand the long-term economics of what they're doing. And I feel like you've had a real insight over the past couple months, because I read you very, very closely about what they are doing and how the economics may be better than people understand. And I'm not taking a position on it, but I just want to put it to you.
Yeah, no, it's interesting. I talked to Mark Zuckerberg for the newsletter last week because he put out that long op-ed manifesto, I guess you could say, about AI, being pro-AI. And he told me, which again is something I'm not sure the market has internalized, that the reason he wrote that is he wanted to state the values he has before Meta releases much more capable models in the near future. And that he was worried about, you know, the public essentially not understanding the company's view on these issues we've been talking about when Meta has models that really put it at the frontier. That to me was a pretty definitive statement that he thinks that's going to happen in the near future. And you've seen them catch up pretty quickly over the last year. Now they're not at the frontier. They still have to prove that. They're getting very close, and they've done that in about a year.
Do you think they have to be at the frontier? Like, I know we're going to go, but does a Meta or a Google have to be at the frontier or not? And the reason I ask is I think, one of two views. Either there's a view that somehow an Anthropic or somebody is so light years ahead of folks, even by 3, 4, 5, 6 months, that somehow they will hit AGI, and there'll be this inflection point where it'll have recursive learning, and not only will they be 6 months ahead, but all of a sudden they'll be 2 years ahead, and then nobody can ever catch up again, and the game is over. Or you believe that there really are going to be 5, 6 different models, and they're all going to work.
It depends if you believe what you guys were talking about earlier about Stripe saying the singularities here. There are people who do believe RSI, recursive self-improvement, which you just mentioned, is already happening. People call it takeoff. People call it a lot of things. But people in the AI community think the world is about to look a lot different in the next 6 to 9 months. If you believe that and you need to be at the frontier, then a company like Meta and Google can't afford to be that far behind. Now, in the current setup of model progress, maybe it's okay to be 6 to 9 months behind because they can just ride everything. They have great businesses that give them cash flow. If you think, there's some kind of godlike thing that happens in 6 to 9 months, then yeah, you want to be at the frontier, but we don't have that yet.
Alex Heath, I feel like we're at the frontier with you. That's what I think.
Thanks, Andrew.
Thanks for waking up early. Appreciate it.
He's bringing us there. Coming up, Prince Harry and his wife Meghan reportedly deciding to move back to Great Britain after several years here in the U.S. We'll tell you what we know next. But first, the AccuWeather forecast with meteorologist Bernie Rayner.
Drenching showers and thunderstorms today, pushing toward New York City, Philadelphia, Washington, D.C. A couple of showers in Boston late in the day. AccuWeather says nice day in Chicago, hot Texas, spotty thunderstorms across Florida. In the west, it's just dry and hot travel delays. Philadelphia, New York City, Washington, D.C., some major delays. Elsewhere, we should be good. AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions so your business stays best prepared. Visit business.accuweather.com.
Prince Harry and his wife Meghan will return to the UK after spending 6 years, and that might be significant here in the US. According to published reports, they say the couple's children, Prince Archie and Princess Lilibet, will begin school in Great Britain next month, but that Harry and Meghan won't resume working roles within the royal family. The couple gave up their royal duties and moved to California more than 6 years ago as relations with the rest of the royal family soured. Recently, Harry has expressed interest in reconciliation. Guys, there's so much to talk about.
We have a lot to. The biggest.
Is it a tax thing? Were they a flop? Were they living above their means?
Well, no. The biggest issue, though, the actual biggest issue, has always been about if they return to the UK, whether they'd be entitled to security in the country. And Harry had long fought this. They'd gone to court over the security issue. And the question, which I don't think is fully resolved, or I don't know how it's going to work out when they're there, is whether they're going to have security that's paid for by the government or whether they're going to have their own private security.
It's a homecoming, nevertheless.
Yes.
Whether
and by the way, it's going to provide lots of ink for the tabloids there.
They must be
endless.
Drooling. Squawk Box will be right back. Welcome back. Top of the hour. We have the second quarter earnings out from Walmart, and they came in at 81 cents a share, which includes a benefit from tariff refunds. Revenue was above the forecast, and Walmart also raised its outlook for fiscal 27, which ends in January. Same-store sales for the U.S. came in below estimates, with the retailer citing headwinds in the health and wellness category. Andrew, that is a GLP-1 reference, I believe.
Yes.
Don't miss a First on CNBC interview with Walmart's CFO on Squawk on the Street, 10 a.m. Eastern time, and the shares are moving lower by about 2%. Going into the quarter, I can say this with confidence. The analysts were warning that because of a little bit of a repayment issue around GLP-1s, there could be some pressure on their U.S. comps. I think they said if you add that back in, add maybe a point for that headwind. Nevertheless, obviously, everyone following the stock knows that already, and the shares are now moving down about 4%. So even with that cautionary baked in, you could call it a little bit of a disappointment.
It is just after 7 a.m. on the East Coast. You are watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Kelly Evans. Among today's top stories, President Trump turning up the pressure on Iran, announcing an economic D-Day. The president called the move, in his words, the most crushing economic operation ever taken against any country. Iran's foreign minister rejected the president's threat, calling it a diversion from America's own mounting debt problem and rising interest costs. Take a look at oil prices right now, because you look at WTI crude, we're now moving into 88.23. So we should probably show a chart of where this has gone, because it has moved up. Brent, you're now at 93.89. Potential progress made on a tariff standoff between the U.S. and Canada. Reports saying the U.S. considering lowering tariffs on Canadian steel and aluminum exports to 25% from 50%. Also cutting car tariffs to 15% from 25%. I didn't see what the latest is on the hockey sticks. Meantime, the U.S. government debt climbing above $40 trillion. That's according to the Treasury Department. And that's a function of years of escalating budget deficits produced by government stimulus during COVID, having caused ever more government red ink. 10 years ago, public debt was about half. And this is just unbelievable to even consider. It's half of what it was today. And this is why, talk about hockey stick, the thing about debt is it really does go like this. It really does. It does. It's not like a straight line.
Yeah.
It's not something that you can sort of flatten out on its own.
If we had 40 trillion back when rates we were running surpluses, it wouldn't be probably 40 trillion.
Right.
We're running a deficit. I think it's more than Medicare and more than national defense is what we're spending on interest so far, fiscal year to date.
And the conundrum is, we have a strong economy. Let's just say it. We have a strong economy, and we are running massive deficits today.
Right. And when we hit a slowdown and revenue,
you can't live in a world where if you have a strong economy and things are going great, that you're not paying down the debt.
No, it's
otherwise it doesn't work.
These 7% budget deficits used to be like an economic emergency, a war, a global financial crisis. Now it's just standard.
And then the question is, and look, this is the question that Pete Peterson, who's no longer alive, co-founded Blackstone with Steve Schwarzman, used to talk about the debt all the time, and whether there's an invisible line in the bond market that turns into a red line. Now, I think he thought 20 years ago that we had crossed that line.
Yeah.
Maybe we haven't crossed that line yet.
Well, negative rates didn't help. We had negative rates, I'm talking about in some of other parts of the global bond market, right up until COVID hit.
Right.
So a lot of this was happening and happening and happening. But when you have negative rates, everyone goes, who cares? What's the big deal? And then it exploded. Now here we are. Moderna shares have soared on the announcement that its personalized mRNA cancer vaccine developed with Merck succeeded in a late-stage melanoma trial. The company's CEO joined us yesterday and explained how they're thinking about the cost of a personalized treatment.
We do not use your own cells to make the product, which from a manufacturing standpoint is very much complex and very expensive.
Right.
So yes, it's going to be individualized, so it's not going to be the same price that's going to make a COVID shot for everybody the same, obviously. But it's not using cells, so it's a process that we can shrink down, and we think we can get it to a price.
Joining us now to talk more about this is Miles Minter. He's a research analyst at William Blair. Miles, it's great to see you. And we could talk a little bit about the cost or the way in which people should expect to pay for this. What's it going to mean for Moderna's bottom line? And then what's the bigger kind of opportunity now for the idea of vaccines against cancer?
Yeah, sure. Thanks for having me. So basically, I think the pricing of this product in terms of being a personalized vaccine for cancer tailored to the patient, that the company has been talking in the realms of sort of cell therapy, but obviously it's much easier to manufacture and get to the patient, and also quite honestly a safer drug. So We do expect pricing to be around that cell therapy price range. It's about 400,000 or above per year. Again, that's not an issue, I think, in the oncology setting. I think for Moderna's sort of business,
just
though, what's
explain
more
that.
important.
Yeah, just for a second, Miles. So when you say $400,000, and for those who are unfortunately in these situations, I mean, imagine a large, if not all of that, is covered by insurance. How does it generally work?
Sure. So, like, if you are covered by insurance or Medicare in this country, that would obviously be, a significant portion of that covered by your healthcare insurance or the Medicare eligibility there. The company itself can also, provide rebates to help there in coverage. The reason why I said that this is not, out of the norm here, obviously cell therapy is priced here, but also Keytruda, which is, a $31 billion product a year for Merck, which we'll talk a little bit about later. That's obviously covered through healthcare plans, and that comes in at around about the $200,000 a year mark as well. And obviously what we're seeing with this trial, which we can talk about later, is additional benefit on top of that product. And so that's how we're kind of thinking about pricing right now. And then back to your first question, just on Moderna's on business. I think that that's really important here and why the stock is moving how it is. Traditionally, this company has been based on infectious disease vaccines, which have obviously been waning as a business since the COVID pandemic. So there is a solution there. As the COVID pandemic has obviously waned here and vaccine sentiment has declined, investors have really been looking for Moderna's next big growth driver. And this franchise in oncology, which is in a 50-50 profit share with Merck, which is the eminent player here in the field, could be a sort of gateway back to that exponential growth trajectory for the company, which investors are getting excited about.
Merck, Moderna, we saw BioNTech up yesterday. Who else could be experiencing tailwinds here from the success of this trial?
Sure, I think we've had a little bit of a resurgence in the immuno-oncology names. So you mentioned BioNTech there. They're another mRNA player. I cover a little small cap called Arcturus Therapeutics as well that was up, which is doing a self-amplified mRNA. But anyone that can actually develop these personalized cancer vaccines and leverage this mRNA technology, you did see shares up there. And then I'll just comment from a sector in particular. Biotech is at all-time highs here if you look at the XBI and the NASDAQ here. And I think it is from data sets yesterday that are potentially changing the treatment paradigms and increasing quality of life for patients. We're seeing that here. And then obviously the way our sector works is that for big pharma like Merck, which is about to lose Keytruda off patent here, I believe, in 2028, we are seeing increased M&A activity in the space. And so these sort of new companies that are developing major breakthroughs in large markets do get bought up by big pharma to replenish those pipelines moving forward. And that really gets our sector going, and you're seeing that reflected in the indices.
It is getting going. I mean, some even say biotech is the new AI, not even directly, but we all can see where this is going. Arcturus, you mentioned 300 million market cap, but up 25% yesterday. Miles, thanks so much. Appreciate it.
No worries.
Okay, coming up, Treasury Secretary Scott Bessent making that big move to lower bond yields. Steve Leisman is going to be with us, the professor, to break it all down and what comes next. Don't go anywhere.
Welcome back to Squawk Box. I'm Pippa Stevens with a look at some of this morning's biggest movers. Shares of Samsung are jumping 9% after a report from Money Trade said the company will announce a more than $72 billion shareholder return program, spending 50% of its free cash flow. The report says the South Korean memory chip maker will hold a board meeting at the end of August to approve the program. It comes as Samsung has seen record profit from AI chip demand, shares more than doubling here year to date. Meantime, oil prices are rising this morning after President Trump vowed economic warfare on Iran and financial penalties for its supporters last night. The UAE halting trade with Iran after it said the country launched 2 ballistic missiles towards UAE territory. Names like Exxon, Mobil, Chevron, ConocoPhillips, Shell, and BP all up better than 1% this morning. Finally, Bitcoin is trading above $70,000 after President Trump called on Congress to lay out clear-cut rules for the crypto industry at a White House gathering with the CEOs of Coinbase, Robinhood, and others. The Clarity Act would define which types of cryptocurrencies are securities and which are commodities. Crypto names like Coinbase, Robinhood, Strategy, Circle, and Bullish all trading higher this morning on the back of that, all up at least 5%. And don't miss an interview with Coinbase CEO Brian Armstrong in the 8 a.m. hour. Kelly, I'll send it back to you.
Do you know what would happen if I tried to pull off those sleeves, Pippa? It would...
Lots of blue this morning.
It's beautiful. Take it. Looks great. Pippa, thank you very much, Pippa Stevens. Treasury yields are, and this is important, following what you just talked about with oil. As we talked about last hour, going back to before the Iran war broke out, the 10-year was below 4%. The upward moves in energy prices even this morning, pushing that yield back up a couple of basis points, 468, 521, let's call it, on the 30-year. This all comes a day after Treasury Secretary Scott Bessent surprised markets with an unscheduled announcement. Senior economics reporter Steve Leisman is here with a look at his bond yield battle. Steve.
Yeah, this is part of something that's been going on for a while now. Scott Bessent, the Treasury Secretary, taking another action to try and drive down long-term bond yields by doubling the Treasury's intervention in the long end of the bond market. But analysts are skeptical, and it could complicate the job of Fed Chairman Kevin Warsh. The 10-year yield just 2 basis points lower this morning following the unscheduled announcement that between September and November, the Treasury would increase its purchases of off-the-run securities to at least $4 billion from $2 billion per operation. The move seems to support Bessent's longstanding goal to drive down 10-year yields, which have risen nearly 70 basis points since the beginning of the Iran war. The yield on the 30-year hasn't been this high since 2007. In addition to increased off-the-run buybacks, that's a bond whose term is less than the original issue, so a 30-year bond with a 23 years left on it, that's an off-the-run. But that comes on top of this yen intervention he was involved in, Argentinian intervention, plans more short-term issuance in part to pay for these purchases on the intervention. Greater reliance on short-term bills is at odds with recommendations of the Treasury Borrowing Advisory Committee, a private sector group that advises the Treasury. They wanted to keep down the percentage of short-term debt. It also could make life more difficult for Kevin Warsh, the Fed chairman. More short-term debt raises stakes for rate hikes because it's much more sensitive to the Fed and their rate. Lower long-term bond yields could boost growth and inflation, and Treasury intervention distorts market signals. Warsh said he wanted those signals to guide policy. For now, the move worked somewhat, down a couple basis points, but the surprise announcement raised questions about whether markets could trust the Treasury to keep its promise to be reliable and predictable, and if such a move will work without real fiscal reforms.
Activist Treasury issuance. That term was coined in 2024 by Rubini and Stephen Myron when Yellen did this. And at the time, they wrote and warned that her move, that they're now doubling what she began, that her move was equivalent to lowering rates by a full point. Myron, of course, would go on to become Trump's key advisor and on the Fed himself. So I think, according to them, these moves do have a big economic impact. And perhaps we shouldn't overlook, and this has been going on since 2024, on and off, on and off, on and off. It's been going on. So I just wonder, again, I don't want to see us become Japan, have a situation that they're in now, but the extent of intervention on yields, high debt and so forth, it feels a little bit like we're drifting in that direction.
Let me separate out what happened yesterday, because there's a technical aspect to this and there's an overall policy aspect to this. People have been asking for a long time for the Treasury to do just what it did yesterday. This idea of off-the-run securities that trade sometimes 70 cents, 40 cents, it makes sense for the Treasury to buy them, take it off the balance sheet of the dealers, let the dealers go into the on the runs, the 30, the 10s, the 20s, and that could lower yields over time. That's a good thing. The way it was done, 2 weeks after their funding announcement, on the morning of a 20-year issuance, it really surprised
By
the
the way,
markets.
Barry Knapp said yesterday they should just have gotten rid of the 20-year. He said, "Who needs it? No one."
That's
needs it.
another
Just get
story.
rid of it."
Agreed. I mean, I don't know if I agree with that, but that's another story that we could talk about. But the way it was done, seemingly after the press made all of this talk about bond yields being high and being a challenge to the economy, and then they come in and they do something like this in a way that is not reliable and predictable.
Well, so that's the question. Does it bring confidence longer term to the bond market, to the investor class?
Yeah.
Or, I mean, I made the analogy that this is a little bit like getting, buying out your 30-year mortgage with a 5-year arm. And that could work out really well for you, or could not, depending on what you think happens to rates.
What's wrong with your analogy is it's a 6-month arm.
Yes.
Okay, and that makes it very sensitive and puts the pressure on Kevin Warsh if he needs to raise rates all of a sudden. Now, it's only a small portion, and by the way, it's a big part of the issuance, but not a part of the outstanding debt in the long term. So I think that's really the way to think about this. The way that makes it really difficult is this whole $40 trillion, $32 trillion outstanding to the public of debt is a confidence game, and you cannot lose the confidence of the people buying your debt. Interesting question as to whether or not Scott Bessent is super smart about these things, but maybe super smart from a position of buying and selling them, not necessarily running the show, right? So he's a hedge fund guy. The hedge fund guy is supposed to game the government guy. The government guy is supposed to be out there to be gamed.
So it's interesting because you're talking about Myron on one end who didn't like this idea, but then if you remember, I think Scott Bessent and maybe Stan Druckenmiller used to talk about the opposite, sort of trying to be more trader-like around our bonds, right?
Right.
And so,
but it has been the
which
policy.
side
It
is
has been the policy of the government and successive treasuries. Now, Yellen did some of this too, to not do that, to not be opportunistic.
Right,
that you go in and you buy bonds and you know the government is not going to game your purchase, for example, on the day of a 20-year auction.
But she
You
started
don't
it with
do
this
that.
twist towards bill issuance, and it's just continued.
Right, and who, by the way, who criticized it? Scott Bessent's criticized it. Who criticized it? Kevin Warsh criticized it. And now they're doing the same thing, but in much bigger proportions. Right?
It might work because we rarely see bond markets trying too hard to fight these government. I just mean in the fullest sense of the long run, like what we're seeing in Japan right now.
Yeah. Look, they have to do the intervention. That makes sense to do this, to take these off the runs off. You save money that way. It's a good idea. Do it in a reliable, predictable way. Explain yourself to the public. That makes sense. You could gain the confidence of the bond market, but this doesn't necessarily seem like the best way to gain trust in a market where you desperately need.
So we can all agree the 20-year needs to go. I'm glad that that's why Steve.
Okay, Steve, thank you. Coming up, remember when the biggest AI worry was about it taking your job? Well, this might top that. We're going to speak with a former White House Homeland Security advisor who's warning now about AI making it easier to create bioweapons. If you want to worry yourself, stick around. And then we're going to talk to political strategist Frank Luntz about how AI data centers have now turned into the big issue for the midterms, and I think he suspects an even bigger issue in 2028. Do not go anywhere, folks. Squawk Box rolling on right after this.
Time now for today's AFLAC trivia question. Which U.S. states officially use the term Commonwealth in their names? The answer when Squawk Box returns. the answer to today's AFLAC trivia question. Which U.S. states officially use the term Commonwealth in their names? The answer: Kentucky, Massachusetts, Pennsylvania, and Virginia.
Welcome back to Squawk Box. What happens when AI and biotechnology come together? Well, a new foreign affairs essay, our next guest argues as these two technologies come together, they make it easier for bad actors to develop biological weapons. She's calling on the U.S. to be better prepared for those threats. Joining us right now is Elizabeth Sherwood Randall, a former White House Homeland Security advisor, now a senior fellow for Harvard Belfer Center. We've been talking about AI safety. I mean, it's become the issue du jour for a long time. We've also talked about sort of what are the worst things that could happen. Bioweapons, maybe, at least in this moment, the closest.
Good morning, Aaron. Good morning, Kelly. Yes, thank you for giving me the chance to talk about this with you. It is true that we are worrying about a wide range of threats from artificial intelligence, and AI-enabled biology is a very powerful and compelling capability that is creating huge upside potential for us in medicine, in energy, in agriculture. It's supercharging biology. It's also creating immense new risks. And what we are looking at now is a landscape of possibilities that we are not prepared to meet. And so this report that has been published this week by the Belfer Center at Harvard and the accompanying foreign affairs piece argue for a national strategy to address the emerging threat from supercharged biology, which is being enabled by the AI capabilities that are emerging, being fielded, and evolving.
Okay, so let's talk about what does that mean? Let's sort of walk through this article. What would you do if you were king for the day?
If I were queen for the day. So I would begin by rallying the private sector to work closely with the government to ensure that we build in the guardrails we need around the emerging biotechnology capabilities that are being powered by artificial intelligence. We have to work together because, importantly, the capabilities that are being fielded by the private sector are also the capabilities that we...
But what does that mean? What does that mean in practice?
It means that the government and the frontier laboratories and the biotechnology sector in this country need to come together to understand the nature of the threats that are emerging and to build the capabilities to protect the most risky of the...
I hear you, but I hear you and I don't hear you, and I'll be very straight with you. The conundrum, I understand the idea that everyone should come together and talk it out, but in a universe in which we live with open weight models, we live with Chinese models, we live with model makers who are all over the world doing all sorts of things that are not regulated, controlled, or otherwise. I'm trying to understand how you're going to get everybody in a room and somehow solve it that way.
So, Aaron, we need to start with the American ecosystem. We have a vibrant ecosystem involving the frontier labs and the biotechnology sector. We need to come together as a nation to field the solutions to the threats that are being generated. And while we have the capabilities emerging for the upside, what we're not doing is leveraging that same innovation ecosystem to produce the solutions that will protect the American people from the emerging biothreats. That's what I'm arguing in this work that we have done, which is that there are ways we can tackle this. We can do it through prevention, but most importantly, we will do it by building national resilience. What we do not have is a system in place for responding to what we cannot prevent. And as you just said, we will not be able to prevent all bioweapons threats because of the way these technologies are being radically democratized, because access is now not just in secret government laboratories or among trained bioscientists. Many individuals will have the capacity to generate novel pathogens. And so we need to be much better prepared as a nation.
Yeah, to jump in and say that it's Kelly here, just as kind of a final comment, is hopefully people will read your piece and think about really smart ways to do so. What I don't want to see, is headlines like this get taken as a reason why people should oppose data centers and why we're just talking about curing cancer.
It's the opposite. It's the opposite. We need investment in our bioeconomy in the United States of America to ensure we have the data centers, that we have the capabilities to fuse the intelligence and the information that we're gathering from a national monitoring system, which we do not have in place. Just like an early warning radar for missiles, we need early warning of emerging pathogens in our country.
I would love that,
That
if that's
information needs
possible.
to be fused. We need to use the data centers to rapidly process the information and then take that and use our biotech sector in a warm start mode with pre-established contracts to develop the diagnostics, the therapeutics, and vaccines that will protect our citizens.
Okay, Elizabeth, I want to thank you for the conversation. It is fascinating. I'm going to have Aaron write a film all about a bioweapon war. I think it would be a very interesting screenplay. Maybe I'll write it with him.
Waiting to happen. That should be what you do.
We'll talk about it.
Coming up, ECB Chief Christine Lagarde is calling for better integration across Europe if countries want to compete in the AI race. We'll get into that topic, plus President Trump's promise of an economic D-Day for Iran. That and much more with Council on Foreign Relations President Emeritus Richard Haas. Squawk Box returns in a moment. Let's look at some stocks on the move this morning, beginning with Advance Auto Parts, down 15% despite better than expected quarterly earnings. But investors are focusing on an unexpected drop in same-store sales for the auto parts retailer. Perhaps a sign people are cutting back, at least there, on spending, down 15% over the past year as well. Going the other way is Deere, the heavy equipment maker, beating street forecasts on both the top and bottom lines and raising its full-year forecast after reporting its first year-over-year rise in quarterly profit in nearly 3 years. Now, it's just a fractional gain, but again, looking at the inflection points and up 18% now over the past year.
Okay, coming up, the AI boom getting political debates over data centers have become a critical issue in the midterms and primaries. The GOP even warning that AI companies, that it could hurt the chances for their candidate in the Ohio Senate race. We're going to get into all of this and what it means. Pollster and political strategist Frank Luntz, he's been spending a lot of time thinking about this. He joins us more on how this particular issue is now picking up a lot of steam with voters. Don't go anywhere. Squawk Box, coming right back.
We're building the biggest plants anywhere in the world. And I can say if I were the mayor of a town or the governor of a state and I had a chance to get a big plant in, an AI plant or a data center, I would absolutely want it because the jobs are enormous and the money paid, the taxes paid are just enormous. And if you don't take it, you're going to be left behind because there are plenty of places that want it.
That was President Trump weighing in on AI data centers being built across the country. Data center construction has become a flashpoint for the midterm elections around the country, and support for opposition don't fall neatly along party lines. Joining us right now to talk a lot more about this is Frank Luntz. He is, of course, the FIL Inc. pollster and political strategist. I thought this would become a flashpoint in 2028. It sounds like it's a flashpoint right now.
Where you are in the country, what the economic conditions are, and how much people really want the jobs. Andrew, do you remember the movie Cool Hand Luke? In the key moment, Strother Martin says, what we have here is a failure to communicate. People who want to build these data centers are not explaining how the populations will benefit. They simply assume that they just offer it and the public says yes. It can pay for all sorts of stadiums. It can pay for healthcare. It can pay for tax decreases. It can make such a meaningful, measurable difference in the quality of life of the communities, but the people who want to build them aren't explaining it. And so some populations across the country, Ohio, for example, the public is turning against it.
So I'm curious if you were, well, let's take two sides of this. You could be a politician on one end, or you could be Mark Zuckerberg on the other, who's made a lot of public statements about AI recently. How would you be articulating the message, since you are in the messaging business?
The first thing I'd say is imagine. It's the most important word.
Hold on, are you Mark Zuckerberg or the politician at this point?
I don't care.
Okay.
I'm either. And I'm doing imagine the impact, and that's the key word. What is the impact on the average individual if this data center is built? If I'm Mark Zuckerberg, imagine the jobs, imagine the opportunities, imagine what we can do for this community right now, right here. Versus the politician who says, imagine the consequences, which is the negative way of putting it, of electric shortages, of water shortages, of the pressures on the infrastructure. The word imagine allows you to personalize it to yourself and allows you to take these numbers, these opportunities, and make them meaningful and measurable. And neither side is particularly doing it all that well. And I actually think that this is not going to be the flashpoint for 2026. This is going to be explosive for 2028.
And what gets it from not a flashpoint today, but explosive by 28?
People have to experience it. They have to see it in their communities. They have to hear the horror stories about those who experienced the construction, those who experienced the pressure on the infrastructure, versus what happens to the community if they turn down, as the president said, if you're left behind. What happens at the community that's maybe 10 minutes away from you is bustling and booming because they added a data center, versus your community that doesn't get any of the benefits and only has themselves to blame.
Well, but here's the thing that I can't understand, and the reason I mentioned Mark Zuckerberg is he has recently talked about, and there's other companies that have talked about creating these funds where effectively not only would you be building a data center in a particular state or town, but there'd be additional funds that would be provided to firemen and policemen and members of the community. Now, a cynic says this is just an effort by Silicon Valley to buy off a community on a short-term basis. Somebody else might say that this is a great economic boon to these towns and to jobs.
They're both correct. It is an effort to buy them off with benefits that you couldn't get otherwise. Imagine the impact of being able to say to your community, with this data center, we will not need to raise property taxes for a decade. Imagine the benefit of being able to offer health care to people who don't have it, and then you don't have to raise taxes for it. Imagine the opportunity to build schools. But on the same token, if you don't communicate it, the public doesn't know, and it is more susceptible to the negative stories, the horror stories that have been put out. And Andrew, the best example of this is Amazon. When Amazon wanted to build more of their supply chain units, let's say, take New York, when AOC said, absolutely not. We're not putting one in my district. The progressives said this is great because these are not good jobs, they don't pay enough. And the public said, what the hell are you doing? We want these jobs, we want these benefits, we want this economic growth, a healthy economy. So it really does depend on how it's communicated, and it really does depend on where that community is dealing with employment right now.
Frank, to that point, it's Kelly here. I wanted to ask you about this last week, and now they're kind of dovetailing. The polls that we saw about the outcome of, was it Michigan, where the Democratic Socialist candidate was polling, there are like 4 different polls, all giving this person a 20-point lead, ends up not happening. Is it something specific to progressive candidates? Is it something specific to polling in some of these states where maybe it's less sophisticated? I don't know. And when we're trusting these polls, when people in elections going into the midterms are going to be trusting polls to say whether their messaging is on point, if that poll is off by 20 points, then we could be out there, you know, kind of running a campaign based on nothing.
You are absolutely correct. And pollsters and primaries should, frankly, shut the hell up. When you have a 15 or 20% turnout, and you're measuring the entire electorate, either Democrats or Republicans, both sides have gotten it wrong this election cycle. And both sides should know that statistically, you cannot project an election if your turnout is 15 or 20%.
So are you saying that we should ignore all the polls for the next couple of months into the midterm? Which ones are trustworthy and which aren't? Should we ignore things like governor?
You should not ask me. And actually, this is my declaration on your show. Don't ask pollsters to project elections when the turnout is less than 20%. We can't.
So just for primaries, do you think it would be better than 20% for the in the midterms? Do you think the turnout should be above 20%?
In the midterms, it'll be 40s, 50s. It'll be much higher, and it's much more accurate. But the key in all of this is not just determining who you're voting. These are good questions. They're not only figuring out who is going to vote, how they're going to vote, but you have to guess turnout, because in the end, there's more heat on the ends of the political spectrum.
We got to go. But I got to ask you this, because Mick Mulvaney made a very important point/question that I want to ask you about. it gets to the different sides of the sort of the political aisles, which is he made a point. We were talking about the DSA, and originally he made the point that Democrats liked when MAGA emerged because they thought that MAGA was so out there that it was beatable, and didn't take it seriously enough in some ways. And now he's suggesting, we were making the point, well, DSA just make Republicans think that that this is a better argument for their crowd. And he suggested maybe there's something much bigger happening across the country. And so I wanted to understand your sense of that debate and whether the DSA is a much bigger, threat, threat's the wrong word, importance than we're giving it credit for right now.
I appreciate the way you tried to ask that question, because you're not trying to show judgment. And I absolutely listen to Mitt Mulvaney because he's an astute political observer. The Republicans are going to be shocked when so many of these DSA people get elected. The state that I'm watching for all of this is Texas. Texas is thought as solidly Republican. It is not, or it is not right now. And you can have the Democratic candidate who's much more progressive than he's presenting himself. He could win that race. And that could be the balance in the U.S. Senate. I think it's much more important to understand where the electorate is right now. The number one issue is affordability. And when the president says that affordability is a hoax, he undermines his own credibility and the success of Republican candidates. Because nothing else matters if you cannot afford to put food on your plate, if you cannot afford to live in the house that you want to live, and you cannot afford to live the American dream. This really matters. DSA, those socialists, Democratic socialists, are talking about issues that the American people care about.
So interesting that you mentioned this, because the DSA is talking about affordability, and the sort of mainstream Democrats, I don't know if you put an Ossoff in a mainstream Democrat kind of category, but that group has just spent a lot of time talking about this administration, criticizing this administration. Whereas the DSA spends most of their time
Medicare for all,
just talking about it's a very interesting dynamic here right now.
Can I give you 4 words? How? It's going to be 5 words. How does it benefit me? How does it benefit me? Those are the words that the American people will think about as they walk into the voting booth. And the DSA is onto something. I may not agree with it, but their messaging is getting better and better with time.
Frank Luntz, thank you, sir. Appreciate it.
Speaking of affordability, Walmart is the latest retailer to join the earnings parade. It's down 6% this morning. We'll break down the quarter with an analyst next. And before the break, check out Bitcoin crossing above 71,000 after the White House meeting involving several big executives yesterday. Coinbase's Brian Armstrong is with us in the next hour. And a lot of volume on Kalshi on where Bitcoin will be at year end. $32 million in this contract and counting, and a pretty even split between kind of 60 and 80K. More Squawk Box 2 minutes away. Shares of Walmart are under pressure this morning. It's in the Dow, right? It's going to put some, anyway.
Yes, sir. Yes,
Should
ma'am.
be putting some pressure on the blue chips. Despite better than expected earnings and revenue, same-store sales fell short. This was the key metric. And the retailers' forecast underwhelmed Wall Street. Let's bring in Michael Lasser, senior analyst over at UBS. Michael, it's good to see you. And we knew that there might be this issue with kind of, you say better than me, reimbursement for GLP-1s, and that was going to subtract from U.S. same-store sales. But there's the comp, 2.6%. I think it's about a point, below estimate. So even if you add that back in, that in the forecast, what's going on here?
What's going on here, Kelly, is that the sales are slowing. Clearly, the piece of the sales slowdown were from this health and wellness issue, but even beyond that, Walmart's seeing a bit of a moderation in its same-store sales growth. Now, if we put this in perspective, what has driven the stock over the last year and a half to this all-time new level at a premium valuation is threefold. One, a stable core business where Walmart sells 1 out of every 5 grocery dollars in the United States. 2, automation and technology that's going to make the business that much more profitable. And 3, rolling in new revenue streams that are a very high margin. The second 2 points were evident this quarter. Now the question will be, does it have to take some of the profitability from those latter 2 points and invest in the first, meaning maintain the stability of the core business?
Right, and a lot of people are asking if Target's on an upswing. It's up 50% this year. It's still very small compared with Walmart. It's had a lot more struggles. But is that possibly where some of its U.S. traffic is going? Is this, you know how this is going to be played, which is just it's going to say the U.S. consumer is soft, under pressure, and so on and so forth. So is it competitive? Is it core consumer behavior?
Kelly, I think it's the latter. I don't think it's a competitive issue. In the last 4 to 8 weeks, we have seen a growing number of data points to suggest the low-income consumer is feeling the collective burden of a variety of pressure points, including these elevated gas prices. We're going to hear that message from Walmart today on the conference call.
What else would you point to, Michael, for the last 4 to 8 weeks? I'm interested because that would be an inflection point. We saw them holding up better kind of in the late spring, even during the oil price spike. But you're saying now in the last month or two, you're seeing more pressure on the low-income consumer. Based on what?
Based on what we're going to hear from Walmart today, as well as another retailer that reported this morning, Advance Auto Parts, clearly called out in the last 4 weeks more challenge in its do-it-yourself business that is serves that lower income demographic. The other notable point that we're going to see is very likely that the dollar stores, Dollar General, Dollar Tree, are going to have accelerated their growth from the first to the second quarter. These are all signals that the consumer is changing the behavior to try and deal with what is a more difficult situation for that cohort.
All right, and again, we're down, but you still have a buy on the stock. You're not saying there's anything to really worry about here, but
no, absolutely not. Like I said, the elements of the constructive case on this stock are well intact. Its e-commerce grew 24% in the U.S. Its advertising business grew 38% business in the U.S. These are very comfortable growth levels that continue to support the bull case on this stock.
And I'm glad you mentioned that about Advance too, and talking about things slowing down. Michael, thanks. Michael Lasser,
Thank you.
Good to see you. Programming note: don't miss a first on CNBC interview with Walmart's CFO coming up on Squawk on the Street at 10 a.m. Eastern Time.
Okay, coming up, one of the most anticipated public offerings of the AI boom is narrowing down its IPO timeframe. We're going to tell you what OpenAI's CFO told employees next. Do not go anywhere. Squawk Box returning right after this. It is 8 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, hanging out with Kelly Evans today. Becky and Joe are off. A lot going on. So much going on.
So much.
We got to get into all of it. Top stories right now. President Trump saying he's ramping up economic pressure on Iran, calling it an economic D-Day. He's warning that any country providing Iran with a financial or economic lifeline would face tremendous economic consequences. And then on the tariff front, reports saying the U.S. considering cutting tariffs on Canadian steel and aluminum to 25% from 50%, and auto tariffs to 15% from 25%. Now, that news following President Trump's announcement that he had been pausing tariffs for 3 days. Canadian Prime Minister Mark Carney saying there's been significant progress on those trade talks. And we are watching Bitcoin right now. Take a look at what's going on here. This after yesterday's meeting at the White House, prices hitting an 11-week high. President Trump calling on Congress to establish clear rules for the crypto industry. We're going to speak with Coinbase's CEO Brian Armstrong live later in the hour. You know, we were talking with Anthony Scaramucci earlier this week and talking about what could be a catalyst for Bitcoin. He didn't actually see a catalyst at the time, but clearly a catalyst
Had a couple.
is here.
Unless you want catalyst to like 100.
Well, and the other question that is the catalyst the Besant move?
Well, that yesterday was when it started breaking out.
Right.
And why
so,
wouldn't it? They're basically
right.
Started
No, this gets to the long-term, short-term game.
Bitcoin, gold, debasement, real estate, grab all of it. The futures are moving lower. The Dow is down about 300 points now. A lot of that is Walmart. Those shares were down 6%, so that is weighing heavily. But the NASDAQ has also turned negative, and that was positive pre-market earlier on. We're down 135 there, down 27 on the S&P. 10-year Treasury, 470, so it continues to edge higher on the back of higher oil prices. Let's get to Pippa Stevens with more on the pre-market mover. Pippa.
Hello, Kelly. So Alibaba is moving lower this morning, down 3% here after posting a 75% fall in profits for the June quarter as AI spending weighed on the Chinese tech giant's results. But CEO Eddie Wu saying AI-related product revenue delivered triple-digit growth for the 12th consecutive quarter, and cloud revenue growth accelerated 45%. Meantime, shares of Moderna are dropping following yesterday's rally where it nearly tripled in price, closing up 177% and seeing its best day on record. Moderna and Merck posted positive initial trial results for an experimental cancer vaccine. The mRNA shot combined with Merck's immunotherapy Keytruda met key goals in a trial of patients with higher risk or advanced melanoma whose detectable cancer had been removed through surgery. Those shares down 8% this morning. Finally, Walmart is dropping despite posting Q2 results that beat Wall Street estimates and raising its outlook. Earnings included a benefit from partial tariff refunds it received, but same-store sales for its U.S. stores came in below estimates, with the retailer citing headwinds in the health and wellness category. CFO John David Rainey told CNBC the company plans to use remaining tariff refunds to lower prices for consumers. Those shares off by 6% this morning. And don't miss a First On CNBC interview with Rainey at 10 a.m. on Squawk on the Street. Kelly, back on over to you.
All right, Pippa, thank you very much, Pippa Stevens.
Okay, OpenAI could be closing in on becoming a publicly traded company. Kate Rooney joins us with the latest. Good morning, Kate.
Hey, Andrew, good morning. Yeah, so from what I'm hearing, OpenAI's CFO, Sarah Fryer, told employees yesterday that the AI giant will be a public company in 2027 or sooner. Have some more details on that. This was at a company all-hands meeting yesterday out here in San Francisco. I did speak to two sources that were in the room and who attended that meeting with Fryer. She did first acknowledge Anthropic, their biggest rival out there, said there is a chance that their competitor goes public in September. Fryer telling employees that's okay. She said, we are running our own race. The IPO is not a finish line. She said it is a milestone, called it another fundraise, and then pointed back to the record fundraise, $122 billion back in March from OpenAI. She said that gives them flexibility. We will be a public company, as I mentioned, in 2027. Her words, we may go sooner, she said, if the business continues to inflect. But either way, she said, we are going to do this on our own timeline. She also shared some new quarter-to-date revenue numbers with employees. So revenue run rate now up 35% quarter-to-date. Enterprise revenue in particular up 50%. And then also Codex, that is sort of the coding side of the business in enterprise, 20 million users, up 3.5x. It does coincide with OpenAI's latest model launch that we saw this summer as well. Fryer did not explicitly mention this Wall Street Journal report that we heard earlier in the day yesterday, but the Journal did have some Q2 numbers that showed a bit of a wider loss, or I should say much deeper losses in the quarter, and then some slowing revenue growth, at least compared to Anthropic. So she didn't say that she was responding to that, but that is the backdrop of all of these numbers, guys.
And in many ways, Kate, I thought the most significant, one of the most significant parts was sharing that revenue inflection. It's like the fourth time we've used the word inflection today, or I have. But it's on the brain literally because of these two companies, because Anthropic inflected, now Open. Basically, they're trying to say, no, don't worry about that measly $1 billion in revenue that we grew from Q1 to Q2. Now they say they're growing 35% quarter to date. That's better. 50% on enterprise.
Yeah.
Is it good enough to move up the IPO timeline to make people feel better about that?
One of the things that I'm hearing, Kelly, is, I mean, these companies do compete. The fact that Anthropic is going out this fall does not leave a lot of room for OpenAI. So strategically, Sarah Fryer, who used to be a banker, she was a public company CFO. She probably knows this better than anybody, but you don't want to follow your biggest competitor directly. So they need to have a little bit of oxygen between those two listings, just by the pure fact that Anthropic is on track, as Sarah Fryer mentioned, to go as soon as September. I think that's earlier even than somewhat people that I have talked to say maybe early October. So not a lot of room for Anthropic to get, or excuse me, OpenAI to get out next. And then there's the numbers. I mean, the losses are deep. Private market investors that you talk to, anybody that's spent time with this company knows it's not profitable and they're willing to fund growth. There's a question about how public markets digest that.
Okay. Kate, great to see you. Thanks for the reporting. Coming up next, Carlyle pivoting back to D.C. as corporate America orbits President Trump. We'll bring you the details about that next. And later, ECB President Christine Lagarde with a warning for European countries about losing the AI race. Squawk Box. Coming right back.
A major issue for corporate America is its relationship with Washington, of course. A new report in Semaphore takes a close look at Carlisle, which is making a pivot back to its D.C. roots. With us now is Semaphore business and finance editor Liz Hoffman. Liz, it's great to see you. Tell us more.
So Carlisle was founded in D.C. as D.C.'s then kind of only what was then called, a private capital buyout shop. It was sort of a newfangled thing in the late 80s. Had it to itself for a long time and then kind of went chasing riches elsewhere. Really wanted to compete head to head with firms like Blackstone and KKR, very New York, very global, and is kind of rediscovering Washington at a moment when, as you say, it's right at the middle of everything. It's very commercially interesting again. And felt kind of like a coming home story in a way that a lot of companies are trying to figure this out. Some are doing it in ways that I think will age. We can talk about it kind of badly and cringily. And I think Carlisle's gone about it in a pretty smart way, which is that they've always been there. They have this real expertise in defense, aerospace, regulated industries like healthcare, and they're leaning in.
Right. I mean, is this access? Is that what it's about, kind of knowing how Washington works?
It's funny. For this story, I went back and I read Michael Lewis did this great profile of the firm in '93 called the Access Capitalists. And then that was a very newfangled idea that you could use these connections they had, former cabinet members like James Baker and Frank Carlucci opening doors. Obviously, now that is how Washington works. I think that Carlisle has actually done it in a way that will age pretty well. Like, they're not hosting UFC fight nights at their headquarters. They're sort of sticking to their knitting in a these are really regulated industries. We know the procurement process. We opened the story with they decided kind of late in the game to get into data center, development. Didn't do it by courting a hyperscaler. They called the U.S. Army, and they are negotiating a lease of federal lands in Texas to build a data center. I think there's a lot of sort of political knots that companies are tying themselves in and shiny objects that are being chased. And I think either after the midterms or after 2028, some of those decisions are going to look a little weird and look a little performative. And I think this is sort of an interesting template.
Tell me more about the data center. Is it for their use?
It's interesting. The government said one thing that is holding up data center development is land, getting land, having someone who can get permits through. And the federal government owns a lot of land. So this is the tract in Fort Bliss, Texas. It's a U.S. Army base. Have a lot of land. The Army is not going to be the tenant here. They're saying we're the landlord, basically. Come develop it. They took bids in the spring, and Carlisle is exclusive negotiations right now. We'll see where that lands to build a data center, and ultimately, obviously, to rent it out to one of the hyperscalers. Those are the off-takers here. But it's interesting that you see Wall Street just tripping over themselves to court the Middle East sovereign wealth funds and royals and undercut each other by a nickel to get hyperscaler business. This is an interesting way in and actually solves one of the big bottlenecks that has held up a lot of this development, which is access to land and power.
Well, but it's fascinating what you just said, which is you have to, it almost makes it sound like you have to be Carlisle if you want to get a data center done. I mean, one of the problems with data centers being villainized is that what's going to end up happening is the construction will still happen for exactly the kinds of people who are most odious to the people preventing data centers. In other words, those who are most well connected with the deepest pockets, who are willing to, as opposed to, maybe an entrepreneur who just wants to go out there and be opportunistic.
It's interesting. I should say, I think KKR also has a similar lease with the U.S. Army elsewhere. But you're absolutely right, though the pain point really is the NIMBYism, that people don't like this. They don't want it in their communities. And if the U.S. government has a lot of land, they can actually solve that problem a little bit. And there's obviously power hookups. There's sort of interesting security parameters already set up at, in federal lands that make it attractive for a bunch of reasons. You could see this could be an interesting template going forward because, as you say, the local backlash from communities is becoming the choke point in these for very understandable reasons.
Or we go to space.
Right. I was thinking, or we go in the ocean.
I was told recently that actually space is the wrong kind of cold for data centers. It's cold, but not in the right way. That because there's no atmosphere, it's very hard to cool things there. So
it's true. It's a vacuum. That's what Dave Cody from Honeywell told us. You still need a lot of complexity out there. Liz, thanks so much. Good to see you this morning. Appreciate the time.
Thanks for having me.
Semaphor's Liz Hoffman.
Okay, still to come, ECB Chief Christine Lagarde with a stark warning for European countries about AI competition. Plus, former Cleveland Fed President Loretta Mester on the Fed Minutes, Kevin Warsh's conversation with President Trump, and so much more. Coming right back. ECB President, I should say Chief Christine Lagarde, calling for a better integration across Europe if countries want to compete in the AI race. Lagarde saying Europe largely missed out on the first digital revolution. Joining us right now is former State Department official Richard Haass. He is the Council on Foreign Relations President Emeritus and Chief Senior Counselor at Centerview Partners. Good morning to you.
Morning, Andrew.
Christine Lagarde made a very important point. The question is there something they can do about it?
Well, first of all, she's spot on. They're late to the party. I think up to now, the Europeans have emphasized more regulation, more worried about the dark sides of AI rather than the potential. You see programs, though, you see two things going on. One is in places like France and Germany, we see lots of activity in AI, and there's also lots of plans with data centers to get those going. So I think ultimately they will, how would I put it, they're not going to be a major player. They're not going to compete with the United States and China. But I think the potential for them is to at least get in the game.
But how do they get in the game? I mean, that's to me the underlying question about all this.
Well, again, a lot's going to depend upon what kind of restrictions they place on the AI systems of others, to what extent, if you will, they have their version of buy European or use European. But I don't want to exaggerate it, Andrew. You know, her basic point is right. It's a larger point, actually. The problem with Europe, in some ways, is that it's not European enough. And by that I mean you have too many siloed national efforts, and the collective effort tends to be more restrictive. And we see this pattern across the board, not just in AI. In defense, for example, you don't really have a collective European defense budget or effort. You have siloed national efforts. So in almost every case, the whole is less than the sum of its parts. What is it? You know better than I would. We're probably, 2 years or so after the report by Mario Draghi, and Europe has been slow to reform itself so it can compete on a scale with the likes of the United States and China.
Well, let me ask you a separate question, which is, how do you think the open weight Chinese models will diffuse throughout Europe? And is that something we should be worried about or thinking about? This goes back to the days when we used to be concerned about Huawei chips being, implemented and owned by European countries.
I think there's a real possibility of that, simply because, one, if they're 99% or 95% as capable, and two, they're far less expensive, there's going to be several European, firms, countries, whatever, are going to want to buy it. And indeed, Andrew, I think it's quite possible, and we've got a big debate going on here, as you know, that we're going to want to get into that competition. And we're going to become less guarded, less restrictive, because otherwise, not just in Europe, but around the world, open Chinese systems are going to dominate. So Europe could be facing a future where it's got to compete with capable and relatively inexpensive Chinese systems, as well as more American systems. So again, getting late to the party is, I'm not here to underestimate the difficulties or the hurdles that Europe faces.
Richard, I want to pivot the conversation to Iran for a moment. We had a bond analyst on the broadcast earlier, and we were talking about what Scott Bessent did yesterday, thinking about the 30-year rate and what's trying to bring that number down. Also, the total debt we have in this country, and really just how the inflection point for that situation, in large part, at least during this administration, has been the Iran war. You could argue tariffs were part of this too, but the war, I think, is really where things shifted. And my question to you is just if you see any ending in sight, and if so, how?
Look, I think the most likely thing for the foreseeable future is a version of the status quo remains the status quo. It's not all-out warfare. It's certainly not peace. It's not even a ceasefire. It's intermittent actions against this or that tanker or against this or that piece of infrastructure. There seems to be, though, Andrew, an implicit ceiling on the degree of escalation. We're not seeing wholesale attacks on the energy or water infrastructures of countries, either Iran or any of its neighbors. Negotiations are not going very far, to say the least. So my guess is a version of the status quo endures, and each side is going to essentially take the measure of the other about how well they're willing to live with it. And my guess is both sides can live with it, for weeks or even months to come.
But I guess the question is, can both sides? And I don't know. Let's just talk about our side. We got WTI crude. We're back up at $89. It's up about 3.5%, almost 4% right now. This morning, I don't know if we get over $90. I don't know if you think just the idea of this continuing, I would imagine, would mean that these numbers get meaningfully higher, and then we get into all sorts of questions about what that means for inflation. Gets back to what Kevin Warsh may have to do. By the way, what Kevin Warsh may have to do in light of what Scott Bessent just did.
Look, it could get to 90, it could get to 100. I don't think we're looking at the 150, 200 sort of worst possible case analyses before the war, in no small part because of China's demand destruction, U.S. increased output, some end runs around the Strait of Hormuz with pipelines and the like. But yeah, we could be facing that kind of a future. And then the question is, I think you're right, we're more likely to blink than Iran. But a lot depends upon not just what the president's thinking about the Fed, but also his willingness to go into the midterms with, say, people paying $4.50 a gallon for oil. If he's willing to do this, this could stretch on.
We're going to see President Xi Jinping make a trip to the United States in September. Do you think that there's going to be a conversation about Iran during that meeting? That has not come up from what we've seen thus far during these meetings.
It could be, but it's hard to me to see how it's front and central. Ironically enough, as I mentioned, China's actually been a fairly big help by so reducing its demand on the order of 5 million barrels a day for oil. Without China, oil would be a hell of a lot more expensive than it is now. But there's any number of things to discuss with China besides all the bilateral issues. Obviously, their support for Russia in Ukraine, the question of North Korea. But yeah, we could talk to them about the future of the Gulf, because China ought to be a potential responsible actor, even a partner, because they have a significant dependence as a massive importer.
Richard, you just mentioned North Korea. The president's made some fascinating, in some cases head-scratching comments about his relationship with Kim Jong-un his plans to try to meet with him. There's now been a back and forth about whether there has been communication or not, and then of course what South Korea and the U.S. should be doing in terms of drills and the like. What do you make of all that?
I think it's a fiasco for two reasons. One is the weakening of the U.S.-South Korean relationship weakens our credibility and our leverage vis-a-vis North Korea, but also this is one of the most successful partnerships we've had. South Korea has gone from an authoritarian country to a democracy. What is it, the world's 10th or 11th largest economy, Andrew? And what we're doing is setting them on a path, I think, to think about nuclear weapons. And speaking of which, I think there's zero chance, even if a meeting between the president and Kim Jong-un comes about, I think there's zero chance that North Korea is going to give up its nuclear weapons and its long-range missiles. It looks at the Iran war and says, you guys attacked Iran. Why? Because they don't have nuclear weapons. So I think the danger is not only whether there's a meeting or not between President Trump and Kim Jong-un. I think the danger is not only that North Korea won't give up its arsenal, but this process could lead to a future where we have two nuclear weapons countries on the Korean Peninsula. And as bad as the situation is now, that would be incomparably worse because it would ultimately bring in China and potentially Japan. So this has been the most stable, successful region of the world, really for 70 years. And we are in the process, I think, of potentially undermining that.
We have to go, Richard, but do you have a quick comment on whether you think we are really getting 10 or 15 million barrels of crude out of the Strait of Hormuz?
I don't think we are. I think we're getting less than that. My guess is it's somewhere south of 10, which is less than half of what we had before the war. But again, there's been increased production elsewhere. Chinese have reduced their demand. So I think the net gap in the world is probably a few million barrels a day, which is why oil is quote unquote only where it is today in the zip code of 90 rather than much higher.
Okay, Richard, always good to see you. Appreciate your perspective on all of these different issues in the news right now.
Thanks, Andrew.
Thank you. Coming up on the other side of this jobless claims data, plus former Cleveland Fed President Loretta Mester on the Treasury's move to lower rates. We're going to discuss and debate it all. The futures right now, we are looking in the red. Dow off about 402 points, partially the
Walmart not helping, but that move up in WTI back towards 90, I don't think
that's having a big impact. We're coming right back to discuss it all.
Yeah.
We are seconds away from jobless claims data and the Philly Fed business outlook. So both of these always important for kind of broad sense of what's going on with the economy, especially after a little bit of soggy consumer data on the earnings side this morning. But here's the real story to watch. 470. We've brought back Steve Leisman on the 10-year, which, if I'm not mistaken, means, Steve, we have round-tripped and then some the level before the Treasury's maneuvers were announced yesterday morning.
Yeah, call it 468, where it was when it happened at 8:21. I have here
That
in
was
my
before it was announced.
before it was announced. That's what I have
And
here.
then we fell, I want to say, 4 basis points or so by kind of the end of the day yesterday.
Yes, you are not mistaken, Kelly.
It was like 7, and then it was 4, and now then it was back up, and today
above
we're
it
back
now,
above.
and that was what we were hearing, was that something like this wouldn't necessarily stick in the absence of sort of longer term reforms.
Rick Santelli, jump in here. I know we're about to get the claims.
Yes, initial and continuing claims hitting the wires. Initial jobless claims expected to be around 210,000. Comes in a little light, 206,000. That would be the lightest amount since it was 200,000 just a couple of weeks ago, the last week in July. Continuing claims, a week in arrears. Well, this comes in at 1,799,000. And what's interesting about this, of course, is that it remains under 1.8 million. It's a little higher than we were expecting, but in the rearview mirror, 1,781,000. So the last time it was above 1.8 million was the week of the 26th of June. So we've had a run once again under 1.8. These are historically really good numbers in terms of being on the low side. Philly business outlook, this is an August number, expecting 24.8, another whopper number, 47.4. This follows 41.4. These are really, really juiced numbers. Last month's number was the highest, going all the way back to November of 21. This number at 47 and change would be the highest going back to April of 21. So anyone who's questioning how the anecdotal evidence is piling up that manufacturing is starting to do better is missing some very, very big early signs. In terms of interest rates, you were discussing the movement in 10s yesterday. On any given day, we have 8:30 or 10 o'clock data. We could easily have seen those types of movements. It was more exaggerated in a 30-year bond, which is why they picked it. It's not the benchmark. It was used as a short in an aggressive fashion by large institutions as they sold the 30s and bought the 20s on the steep and bought the 2s on the steepener trade. That's why when all this was announced yesterday, the 2 years basically went up in yield, and of course the 30 years went down, and that really was a message, and it was optics, but it was also a very perceptive Treasury Secretary who noticed all the shorts piling up on that spread trade in the very long end of the market. Back to you.
Let's put up maybe a 2-day, if we have it, a 5-day of the 30-year. I mean, Rick, we've almost round-tripped on the 30-year. We're only 7 basis points below the 533 all-time, recent high. We were down at 519 yesterday after this was announced 518.
Let's discuss the Japanese 30-year bond, okay? If you want to trade it, call the Bank of Japan now and tell them you want to trade the 30-year, and they'll call you back in about 4 days and make you a market.
I think we're heading that
See,
way.
these aren't the benchmarks.
I think we're heading the same direction.
That way. It's liquidity, okay? Why are you talking about
That's not what our market guest said at 6 a.m. She said she works on the fixed income desk at JP Morgan, and she said it's not liquidity, it's price. Nobody wants the yield at those levels. That's it. It's not a liquidity issue.
You know what? There's a lot of people that work in a lot of desks, and I'll still go on with them on a debate one-on-one.
All I'm saying is this is not a lot of staying power for this announcement.
But what did you expect? How do we know if the announcement wasn't made where interest rates would be? And the reason they're going up is oil. The reason they're going up is oil. The whole point is it all about optics. The Treasury Secretary gave a couple of large hedge funds a little nod saying, you can't get away with a free lunch on some of these big positions in the long end forever. We're watching.
Leisman, we got Steve here as well. Look, the data was strong, but I think if I'm assuming that this is why the Treasury is doing it, they want longer term rates to fall. All I'm saying is the early verdict is this is not overwhelmingly effective in that direction.
It does not appear to be. I'm struck by what Rick said, which is that the Treasury Secretary saw some people short and I forget exactly, but decided to pounce. That's That's what makes me a little nervous, and it makes some of the people I'm talking to a little nervous, that the Treasury Secretary is in there kind of playing the market on either a daily basis or, again, as I said before, and I think Rick
The
would
Fed
agree.
plays
Rick,
the market, the Treasuries, they all play the market.
Okay, let me just
What
finish
was
this, Rick.
forward guidance? Forward guidance
Rick,
was
I just
playing
wanted
the
to
market.
I just wanted to find an area where we agreed before we disagreed, which was that.
I know, but it's just not that unusual to make this big a deal about it. I'm truly amazed, and I think it doesn't make sense to me.
All right, that may be the accurate take, but let me just make this one point, which is that Rick and I can perhaps agree, as many people in the bond market think, which is that the Treasury should be doing this. That is good policy to come in and buy these off-the-run securities and to allow space on dealers' balance sheet to come in and buy the on-the-runs, and that long-term this is a good thing for the Treasury market. The only problem I have, Rick, and the reason why I think there is perhaps, and I say perhaps, a longer-term effect of this is coming in 2 weeks after you did the refunding, on the morning of a 20-year auction, on a day when the market got caught short, when you're trying to kind of game the market. There was another, better, different, calmer way to do this that would have ultimately gotten more trust from the bond market rather than this morning. What I'm hearing is less trust, and I'll just leave it there, Rick.
Yeah, no, that's fine. You know what? I don't think the timing would have made a difference in the outcome. I don't think the outcome is necessarily going to last very long. But I think the important issue is to consider where all the real trading is. The real finance trade is in 5s and 10s. Those are the maturities that matter. And we still haven't traded 4 3/4. Just for the record, even though we've gotten right up to the water line without putting our toe in the water.
Okay, last thing.
Rick and I have a bet, just so you know.
And that's fair.
475.
Rick, I promise I'll move on. But Rick, the only last thing I'll say is, if we all know that the 30-year doesn't matter that much, why would they use
I didn't
their
say it doesn't matter. I just think that it isn't the benchmark, and it moves for a variety of reasons that aren't nearly as significant as the 5s and 10s.
But then why fight? Then who cares? Then let it go to 6%.
Because he's sending in a message. Because the media in particular has been so focused on it. So now he's keeping an eye on it too, and he's letting you know he's keeping an eye on it.
Rick, in a world where the Fed chairman wants a pure, unfiltered signal from the bond market,
which is impossible. It's impossible. Since 2007, it's impossible.
Notwithstanding that, that's what he has stated is his goal here. Does the Treasury coming in and playing with duration in the bond market, does that help provide that unfiltered look, or should we get used to, in your opinion, more intervention from the Treasury market, and is that the way we want to run our markets here?
How many T-bills did the Treasury issue lately versus 5 or 10 or 15 or 20 years ago? See, the point is, what you're talking about is all involved in a normalization process. So he's not tinkering with something that the new Fed chairman wants to have a better signal. He's cleaning up the mess so we can get there.
No, it's the other way around, Rick. He's as a percentage of total outstanding
There's
debt.
nothing wrong.
The short end
where
is
our
rising.
issuances on the yield curve is completely distorted, and for him to tweak duration adjustments by doing buybacks, which are already been going on, which have been going on for 2 years, and very little verbiage on until yesterday.
All right, maybe we should be doing more on
again
it.
Underscores timing and
But the other piece is whether this actually
long rates.
puts the Fed at odds. I mean, look, it may be that the Fed has to actually slap down this kind of situation.
Somebody I know said the Fed should come in there and raise rates as a result of this, but I don't think that.
Let's see what Loretta Mester
Yeah, sure, that's going to happen.
Joining us now is former Cleveland Fed President Loretta Mester, because let's get an expert's opinion. She's a CNBC contributor and adjunct professor at Wharton. Loretta, I mean, as candidly as you possibly can, what do you make of all of this?
Well, I think Steve is right. The irony of this is that the Treasury is intervening at a time when the Fed wants to be able to use signals from the market, and the Treasury is intervening to affect market prices. So I find it an ironic situation. I'm not surprised that the effects haven't lasted very long, because it's the fundamentals that are really driving what's going on in the long end of the bond market. You know, there's concern, there's uncertainty about the geopolitical situation. So uncertainty itself is raising long bond yields. We also have the inflation coming from the Iran war and oil price hikes and concerns about inflation. And then we, of course, have, which I think you talked about earlier on your program today, the very high deficits that we and other countries are running. So those are the fundamental things. You can come in and do duration changing, which is what Treasury is trying to do. It's almost like an Operation Twist kind of thing, where they're trying to lower the long run, the duration in the market of the Treasury market. But they're not going to have really lasting effects unless you keep doing it. And my feeling would be this is different than interventions that have happened in the past, where it really was a liquidity situation. This appears to be a desire to lower the long end of the bond market.
And for better or worse, it doesn't appear to be working, but part of that is going to be a function of what you think happens to oil prices. We're watching oil prices go up this morning, which is what's having an impact on all of this. And so if you think about it as a short, go ahead.
No, go ahead, finish.
No, I was just going to say, if you think about this as a short-term, either you need to believe, I think what Rick believes, which is that this is a liquidity, a sort of market event that's supposed to send a signal, or you think it's a political event of sorts to try to actually lower the rate.
Well, it is a signal. It is a signal that the Treasury Secretary is looking at the rate yields and perhaps doesn't like what he's seeing in the market. So in that sense, it's a signal, and I think that's why the market reacted yesterday. But in terms of actually changing what's happening in the long end of the bond market, you've got to address some of the longer run issues. And there's no real desire that I see to do anything about deficits, either political party. So that's a problem. And we don't have much, evidence from the minutes that the Fed is poised to raise rates. Now, what this does do is it raises the risk for inflation, which then I think the Fed will have to respond to. I didn't find the minutes particularly hawkish, saying that the president thought that if inflation didn't come down, they're going to have to raise rates. That's not a particularly hawkish statement. I mean, their narrative has been, after we get through tariffs, after we get through the oil prices and they stabilize, we're going to see inflation come down. So they're basically saying if we don't see that happening, we may have to raise rates. Is that hawkish? I wouldn't think so. So at the moment, I think the pressures now are the right, there's more appropriateness to raise rates, but at the same time, this kind of intervention is going to make the political side of things, I think, put more pressure on the Fed to keep rates low. And so you have this tension, I think, going on that is going to have to be resolved.
Somebody has said that the financial system we have in the U.S. is more complicated than it's worth, and it is ridiculously complicated with some of these barriers or different lines between what the Fed does and what the Treasury does. And one of the interesting things out there is Kevin Warsh has sort of gotten this idea of render unto Caesar what's Caesar's, which is to give responsibility for certain things to the Treasury Department and let the Fed back off. Where is the line, in your opinion, between what the Fed's role is here in keeping interest rates down and what the Treasury's job is? And is it clear to you, or do they overlap and does it become confusing? And is there danger here that the Fed ends up acting in part an agent of the Treasury?
Well, the Fed is a fiscal agent of the Treasury. So, I mean, in that sense, we are the banker's bank for the Treasury. But look, there's a very clear demarcation in my mind, right? The Treasury is supposed to manage government debt, right? The Fed is supposed to set its policy rate, the Fed funds rate, at the, to keep prices stable and to keep the economy working at maximum employment. And that's very clear, and I think that demarcation is clear. Where it gets a little bit muddled is that when there is liquidity issues in the market and the market isn't trading, that's a financial stability issue and a market dysfunction issue that the Fed has come in to address. And I think that's very appropriate.
But this is where
managing the maturity structure of the debt only happened when the Fed used quantitative easing. And that happened, right, once interest rates were put at zero. And I think that's caused this backlash.
My only comment, Loretta, would be that's where the Fed gets into trouble having, and where Kevin Warsh is right here, having a $6 trillion balance sheet gets it into the Treasury's business in a way that it wasn't and perhaps shouldn't.
I don't disagree with that, and I think that is a legitimate thing for the Fed to address. And I believe that the committee, there are many members of the committee and participants in FOMC meetings that want to work to try to get the balance sheet lower. We were doing that when I was on the committee. We had how do you bring the balance sheet down and how do you change the composition so that it is primarily Treasury? So I think that'll happen over time, but that can't happen overnight. And I think part of what's happening is we don't have very much clarity yet on what Kevin Warsh's plans are. We don't even have clarity on their reaction function. And so there's just going to be a lot more, I think, uncertainty in all these markets. And we're going to see that in market pricing. And so some of what's happening, I think, is uncertainty about the geopolitical situation, but also uncertainty about really how is the Fed going to bring inflation back to 2%. We can say we can bring inflation back to 2%, but unless we kind of explain how is the Fed going to do it, it's going to be uncertain until that happens.
So great to have you here this morning with everything going on. Loretta Mester, thanks so much. We really appreciate it.
Thanks.
Meantime, chipmaker Micron Technology investing $10 billion over the next decade in a newly announced memory and AI research institution. Micron saying that operation, to be known as Micron's Research Labs, will be industry-wide collaboration with customers, the academic world, and government. The goal is to develop future breakthroughs in memory and artificial intelligence. And Micron CEO is going to join Jim Cramer on Mad Money tonight. That's at 6 p.m. Eastern Time. But up next, you don't want to miss this. Coinbase CEO Brian Armstrong, who just met at the Oval Office with President Trump yesterday. We're going to talk all about it after this. Welcome back to Squawk Box. President Trump hosting a group of tech leaders and regulators at the White House yesterday, including our next guest. Joining us right now from Washington is Coinbase CEO Brian Armstrong. Brian, it's great to see you. You were standing next to the president yesterday. He talked about a lot of things. I'm curious if there's anything that you picked up that he talked about either with you or the group that we didn't see on TV.
Andrew, good to see you. And yeah, I mean, the big topic of conversation, both at the live session and in the Oval Office, was about clarity. The Clarity Act is coming up for a big vote with the full Senate floor on September 15th. And it represents a lot of bipartisan work. The president was keen to mention that. And thousands of hours from the Senate and the House have gone into getting this to be bipartisan legislation. It's also a good bill for law enforcement to go protect against illicit activity. It's a good bill for the banks. It gives them 13 new powers to go grow their business. And it's good for the crypto companies. And most importantly, it's good for the 50 million or so Americans who own crypto. And so that's the big opportunity we have now to cement all of these changes that everyone's worked on in this administration and make sure it's durable for many decades into the future.
If you were to handicap it at this point, you say it's a winning vote at this point?
I'm pretty optimistic it'll get over 60 votes, and I think both sides got 90% or so of what they want, which, in any deal I've been a part of, that you say yes to that deal. And like any good negotiation, there's a few last-minute things people would want something a little bit more or less, but now it's really good that we have a deadline, September 15th, and I've got to give credit to Leader Thune, who scheduled that. There's a lot of competition for that floor time. There's a lot of competing interests. He would not have scheduled this on September 15th if he didn't think it would pass.
One of the other big issues, and I know you've been spending time and meeting with the SEC, as have been others, about the idea of tokenization, and really the idea of what kind of exemptions the SEC could potentially put in place to encourage innovation, really in the absence of Congress passing any laws.
Yeah, well, you've got to give a lot of credit to Chair Atkins at the SEC and Chair Selig at the CFTC. They have made it very clear that they're going to continue to publish clear guidance and rules under their existing authority, regardless of what happens with the Clarity Act. So I think they're ready to move forward on that. They've actually, even just this week, the SEC put out new rules clarifying for the first time how crypto projects can go raise money that in the markets that are securities. That's something that we've been wanting for many years. I think the SEC is working on now an innovation exemption about how crypto securities could be traded in the U.S., which tokenized equities. Coinbase has been working hard on this, but we've so far only been able to do it offshore outside the U.S. In fact, we're launching our tokenized equities product next week out of Abu Dhabi for non-U.S. But in the U.S., we should be moving in this direction too. Same thing with single stock equity perps. So there's lots of work that these regulators are doing, and they're going to create clarity regardless of what happens with the Clarity Act itself.
So Bitcoin bounced yesterday. Your stock also bounced yesterday. I'm curious how much you think that was a bounce off of the back, effectively, of the meeting that you had, or it was really off of the bounce, I don't know if it's a bounce, but really in reaction to what Scott Bessent did yesterday.
Yeah, well, I think those are both good theories. I'd like to think that people are reading the tea leaves a little bit on a few things regarding the Bitcoin price. One is that we've been in a bear market on spot crypto trading for the last year or so. And if you look at the prior bear markets, they each lasted about, 370, 380 days. We're basically coming right up against that, where people, they're going to say, well, this one's about over, and it's time for the next bull run in crypto. They're also looking at this September 15th vote for the Clarity Act. And then traditionally, following the Bitcoin halving cycles, like October, November, December, these tend to be good months for Bitcoin. So I think there's a good chance we're on the cusp of the next bull market for spot trading in crypto. But what's important is that in this bear market, Coinbase has really diversified its revenue. We're actually only about 12% of our revenue now comes from Bitcoin spot trading. The other things that have been growing in this down market for spot trading are things like crypto derivatives, prediction markets, stablecoin payments, tokenization of real-world assets like these stocks that I mentioned. And the big one that's on the horizon is what we call agentic finance, or AI-fi. That one is just getting started, but I think has potentially the biggest TAM, because there's going to be more AI agents than humans in not too distant future, and they're all going to have to, have an economy to get work done on our behalf.
I've got a maybe hard political question for you. This president has been very helpful to the crypto industry, and yet there have been all sorts of questions about the role of this president and the president's family as it relates to crypto. There was an op-ed in the New York Times recently that suggested that much of the conduct may be very well unconstitutional and illegal. And I'm curious whether you think that it represents a cloud over the industry, whether you would prefer, all things being equal, that the family not be involved in crypto, or maybe you do.
Yeah, so this is a complex subject that I know lots of people in the Senate are debating. And, one thing I would say is that the president and the White House have put an ethics offer on the table that could go into the Clarity Act. It requires, I think, moving his funds into a blind trust, or there's different variations of that are being negotiated back and forth. But that's pretty unprecedented. I don't think there's any actually bill prior to this where the president has voluntarily offered something like that to go into the bill. So there's a real offer on the table. There's some things I know the Democrats would like that's even a little stronger. My understanding is they're going to keep talking and work out some kind of a deal there. But I think the most important thing to recognize is that, yes, the ethics question is big. I'll defer to Congress and the White House and the president on how to solve that. But there's a lot of good stuff in this bill about consumer protection and how to reshore all this back into America. And so I think everyone kind of realizes the ethics part would be nice to have perfect in everyone's book, but the 90% of it, we should not leave the status quo and leave Americans unprotected as a morass of state legislation to operate in the U.S. That's just going to ensure this all goes offshore.
And then finally, Brian, you're in Washington today, but I imagine at some point you'll be flying back to Los Angeles, where I believe you live in California. And my question is whether, given all of the news and headlines about wealth taxes in California, we've been talking about Ro Khanna almost nonstop the past couple of days and some of the comments that he's made, whether you intend to stay there and what you think of all of this.
Yeah, so I think it's really unfortunate what's happening in California. I think we all pay our taxes on gains and our income, and then you have what's yours. And it's pretty unprecedented for someone to say, well, we're actually going to come tax you again and potentially seize your assets. And there's all these questions about how do you even value that? Now, there's one other piece which, if let's say there was just a higher tax in whatever form it arrives in, and I felt like it was going toward really productive outcomes like, educating people or healthcare. But the challenge is that we're now seeing there's a pretty high amount of fraud and waste and abuse in California. So I think it's a dangerous precedent to get into asset seizures. That's the kind of thing that third world countries do. It typically doesn't end well. Long way of saying I'm considering all options about relocating out of California before the end of the year. Nothing to announce yet on that front, but my hope is that cooler heads prevail in California.
Fascinating. Brian, it's always great to talk to you. We appreciate it very much and look forward to talking again very, very soon. I want to thank you.
Oh, that's it. That's the end.
That's the end of the broadcast, folks. Make sure you join us tomorrow. Squawk on the Street is up right after the short break.
Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber here at Post 9 of the New York Stock Exchange. Kramer's at Micron HQ in Boise. They've got some news today, which Jim's going to bring us in just a minute. Meanwhile, futures are a little soft here as the bond market continues to test Treasury. 10-year near 4.7, essentially erasing that decline from that buyback announcement. Walmart, meantime, missing comp estimates for the first time in at least 5 years. As for oil, about a 1-month high as the president declares economic warfare on Iran. Gas prices around 4.10. Let's begin, though, with Jim, live at Micron. Jim, busy day for you.
Yeah, it really is, and we've got an announcement here today. Sanjay Mehrotra is the CEO of Micron, where we are in Boise. He's putting together a research lab. It's the kind of thing that it's almost like a Manhattan Project for memory and AI. And Sanjay's going to talk about it on our show. This is a rather remarkable construction site, one of the largest in the world. And I'm glad that they invited us here because this is all about investing in America and manufacturing, Carl and David. It's really exciting.
So we got $10 billion. AI and memory. Right. Tell us exactly what the project is.
Sure. I mean, the idea is that we have to have a longer range research opportunity here. That it's the kind of thing that used to be done at universities. It's kind of like basic research. We always did applied research at corporations, basic universities. Universities don't do much of it anymore. They're too strapped, or they're not interested in doing it. Sanjay Mehrotra wants us to be the world leader in this one particular part of the AI chain, which is memory. Memory, at least when you listen to Elon Musk, he would tell you memory is now the most important thing. It used to be considered dumb. Now it's considered smart. And David, when you get this shift where you have something that was an afterthought that is now, a lot of people think is the bottleneck, but Sanjay Mehrotra, CEO of Micron, thinks is the opportunity, that, all I can say is that to see it happen is to realize that we're really much more part of the industrial revolution. That's the fourth revolution. It's real. And Carl, it's real, and it's very exciting to be here.
Yeah. Of course, interesting to note many of those universities you cite have had their government funding cut for basic research. But certainly think of Bell Labs, for example, and the incredible advancements that company, of course, Ma Bell made many years ago with all of their scientists in New Jersey, Jim. You're at the heart of the story, of course, and I'm looking forward to hearing what Sanjay has to say, both in our show and obviously a longer interview as well you're going to conduct for Mad Money later in the day. I mean, and it continues to be sort of the key in many ways, as we like to say, Jim, to this market. I think still some grappling over, the run rate of revenues at Anthropic and or OpenAI, and whether in some way presages some sort of, I dare I even say the word slowdown, because it seems ridiculous when you think about the needs for compute, which I'm sure you'll get to, Jim. But that said, it's still kind of running the show to a certain extent, and in terms of the way some of these names are moving that we follow so closely in the so-called AI ecosystem.
Well, look, I mean, we're to the point where we find out that if OpenAI had 4 good days, it's newsworthy, or whether they're going to do an IPO September 18th or October 22nd. I mean, we got to step away from that for a second and take the long-term view that Sanjay is really pounding here, which is the idea that, look, it may be, you may think it's not happening fast enough, and I got to tell you, there's so many people out there, and so much construction equipment. I don't know how they even get this thing done. There's just so many moving parts. You may think that it's slow or that it's slowing, but David, when you're here, you recognize this is just a juggernaut. We're one little piece. Carl, I think a lot of this stuff is going to end up being robotics, self-drive. That's where we're going to see a lot of memory, that you can't get enough memory when it comes to robots. And that is not OpenAI. OpenAI, that's become a parlor game when they're going to come public. I don't want to play that game. Take something bigger. This is bigger.
Well, wasn't it Sanjay who, in the last earnings call, talked about the step function in memory required from EVs or autonomous to humanoids?
Yes, 100%. Look, we got to. Sanjay has had to be the ambassador, the proselytizer for the notion that these little chips, of which, by the way, one of the first ones was done right here in Boise, and that's the legacy here, that these chips are in control because the amount of memory that you need in a robot, the amount of memory that you need in a data center is so huge that it was chronically underestimated. And these companies didn't have enough money anyway. The only company that's really spending in this industry in our country is Micron. They're the only one. And I think it's really important to highlight them because everybody else is just giving money back to shareholders. I love that. I love shareholders. But this man is spending fortunes to make it so that we're dominant.
NVIDIA is giving money to everybody. I mean, what are you talking about? They're not giving it back to shareholders. They're like, you got we'll back you, we'll back you, we'll back you, we'll back you, we'll back you.
No, SanDisk, Western Digital, Seagate have not been as, let's say that they're more spendthrift. No, right? NVIDIA. I mean, how many times can you beat me up on NVIDIA? Now,
I'm not beating you up at all. I'm just making a point that they are a source of capital, so to speak, at least in backing up. Not necessarily ever going to be used, but certainly their balance sheet can be used to help finance endless, it seems like, given the free cash flow characteristics of the most profitable, biggest company in the world.
That's true. Not disagreeing, but I went out with a senior team of Micron last night, David.
Yeah.
They did say you were grumpy back from vacation. Everyone on the team agreed with me that you were grumpy.
Yeah, we got a lot of what's wrong with the boys yesterday.
Yeah, I know. I was a little cranky.
Everyone said, how can he come be grumpy after vacation? Before you go on vacation, not after.
I know. What can I tell you, man?
That was the takeaway. That was the takeaway. Setting you up for second, your grumpiness first.
I don't have
putting it out there. Carl, I'm just putting it out there. That's what
I know. The camera doesn't lie. Right? The camera doesn't blink. Jim, let's get to Walmart. It's down sharply in the pre-market. They do raise their full-year earnings and sales guidance, coming in shy of street forecast. As for Q2, it was a top and a bottom line beat, helped by this 23% jump in e-com. But U.S. comps 2.6. That's the first miss, we think, Jim, going back at least to 21. We will have a first on CNBC interview with Walmart CFO John David Rainey in the next hour. David, you know these guys fairly well. The Q3 EPS estimate was below the street.
Yeah, I mean, I'm looking at a couple of notes here this morning, as you might expect. Well, Morgan Stanley, theirs is titled "Understanding What's Slowing Their Funnel." That comp, as you point out, the deceleration to 2.6%. Shows what they say is the compounding impact of weaker macro, elevated gas prices, and slowing consumer sentiment. This is Morgan Stanley, for what it's worth. They said they understand the momentum slowed sequentially through the quarter, Jim, but they claim to have underestimated the magnitude of the headwinds. And further questions to come. Of course, we'll get that opportunity with the CFO in a little bit as well.
It's never been as difficult to try to figure out what's going on because we've got these pharmacy headwinds that come from the U.S. government. We also have the tariff rebate. Did they just use the rebate 100% to keep prices down or even lower prices? We don't know. I know that when you speak to John David Rainey, he's going to say, listen, we got to worry about whether there's still relevance to comp store sales. Now, I've always felt that anytime you dismiss comp store sales, you might miss something because they are in the end the big determinant. But David, he's saying it's legacy fixation. So you're going to have to say, wait a second, I don't think so. If you want to compare apples to apples, right? I mean, we can't just say, listen, we don't have to worry about same store sales when it comes to Walmart, which is one of the reasons why I think the stock's down so much is people are saying, wait a second, how about Target? Well, much smaller. But David, Target had all the same problems and all the same consumers, and Target did some good numbers.
Agreed, and we talked about it yesterday. We asked an analyst actually as well yesterday, and he did point about the respective size of the companies and said even if Target was taking some form of market share, it would show up as such a slight amount percentage-wise for Walmart. But it is interesting, to your point, to note, Jim, that Target actually had stronger numbers in that sense, and obviously that stock has been a vast outperformer this year after years of underperformance.
But David, don't you believe? I mean, you know that at the pharmacy, because of GOP-1, it's really hard to figure out whether you just don't have whether you don't have apples to apples even with their own company, because a tariff impact and the idea of what I think if you add these back and you add back the pharmacy, you're going to get a 3.4% comp. You can actually claim that you can do that. I'm not kidding. If you reverse everything, it still comes to 3.4, which is why I think the stock down 7.5% is not right. And I think it's an opportunity. Not like Target yesterday during our mad dash, but I don't think the stock should be down almost 8%. That seems wrong to me.
Yeah, you see, of course, they're talking about, Carl, as much as $3 billion in tariff refunds.
Yes.
Strong e-commerce, Carl, as well, though. It was up, I think, 24% compared to 26% in the first quarter. So that continues at a significant double-digit rate in terms of the gains there on e-commerce, which, of course, has been such an important part of the overall strategy, Jim, of the company. Since certainly Doug McMillan took the reins, of course, important to point out he's no longer the CEO.
True, but advertising is. Remember, they had advertising, David. You first introduced that to me in Amazon. They suddenly had the flywheel of advertising. It's been great for Walmart. E-commerce is crushing it. Again, I think that these numbers are a little bit distorted. I think that when you get Walmart this cheap versus where it was, it's kind of interesting. Now, I think what a lot of people are worried about is, wait a second, what was Walmart doing at 42 times earnings? In retrospect, Walmart was too high, 42 times earnings. But now you're starting to get 38, 37, still not cheap. But I don't know. I don't want to throw it away.
You don't think it's a broad reflection, perhaps, of a slowing consumer overall?
No, I don't. We've got too many good numbers from other companies for me to think that. And Walmart does offer really terrific pricing. I do think that there is a Walmart pharmacy is very hard to understand, and I think it's got a lot of people baffled. But I think apparel is okay. Food is good. I just think that they keep prices lower. I think they, Target rolled back prices on 10,000 items. I know you're absolutely right, Target much smaller. I think these guys are keeping prices down tremendously, and it is hurting their profitability. It is hurting it. But I think overall what their view is, we're going to get the customers. And there's nothing wrong with that. Keeping prices low to get the customers is what Sam Walton did. They're using a Sam Walton playbook. We're not used to seeing a shortfall. But it might actually
no.
be
Do we have comps for Walmart built in Sandbox? I mean, I don't know. Well, I asked... Well, maybe you can build it later, Jim, but that chart of U.S. comps in Walmart, not Sam's, is difficult. It's a difficult chart, and that's going to take you back to, 23 at least.
Yeah, but if you did back out the maximum fair price regulation, you do get a 3.45 number. But you have to back out that particular pharmacy federal rollback. And I think that's what's confusing people. It's really hard to explain, but and plus the fact that people just say, why do we give such a high price to earnings multiple to Walmart? And I think the reason why you do that is it's consistency. But this was a number that was inconsistent. I'm not excusing it. I'm not saying that things are great. I am saying that they may not be this bad. That's all I'm saying.
Underperforming Costco for the year after several years of outperformance versus that name. Meantime, Jim, stocks are on track for a lower open here after snapping that 3-day loss. Crude on the rise, as we said, as the president threatens to launch what he calls the most crushing economic operation ever taken against any country, against Iran. Yields back on the rise a day after that bond buyback program. Jim, that's what everyone's chatting about, is the 10-year essentially erasing what we got, going back to 4.7.
Yeah, I mean, look, when you do that kind of stuff, it's a shame that Besson did it. I mean, you just did a 30-year. 30-year didn't go that well. And then you buy back some of the 30-year. I mean, no. I mean, the people who trade recognize that, look, just let things happen. We find some level that is a real level in bonds. Obviously, it's not the level that's been mandated by Treasury with a couple of bill. That was ridiculous. I really kind of, look, I think Besson's a smart guy. I'm not going to just say that this was I'll just say it was an ill-advised move. The fact is that oil's in control, and you can buy all the treasuries you want if you're from the U.S. Treasury, but oil is going in the wrong direction. And David, when oil goes in the wrong direction, every time it ticks another dollar, then rates go up. And I don't know did Besson not see that correlation? Everyone tells me he's such a genius. Isn't he a genius?
I can't speak for Besson. Unlike so many of our colleagues, I don't really have a relationship with the Treasury Secretary at this point. That could always change.
He's like a nice fella. I met him on the floor of the exchange. Nice guy.
Seems like a tough guy. Yeah, wouldn't want to get in his way. That said, on the broader market, guys, I did want to point out, we're coming off a day yesterday that was, for the people I speak to in the sort of multi-strat hedge fund world, brutal day. If you were short Moderna yesterday, Jim, oh my God. And by the way, their own CEO indicated there were 52 million shares short, at least on Squawk Box when he was a guest yesterday. That was incredible, that move. A lot of pain inflicted, not just there, but on the AI trade that we were talking about earlier as well. But I will say these last couple...
Warriors, come out and play. Warriors, come out and play. Warriors, come out and play. I've got 15 minutes. Jobless claims in 12 minutes. Boom, 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 boom. TSM, boom. We got a double bottom on TSM. Write it open here. I'll get my shoes off. Turn on the air for a little bit, pull this thing down. Okay, where's your slippers? Get it. Oh. Well, the demand of chip prices up 15%. For a year, they've been CapEx this, CapEx that. Earnings have been great. SanDisk, oh, SanDisk is at my support. Yeah, it did. Oh, yeah. Darn it. I hate typing. Why can't it ever be right the first time? SanDisk hit my first support. Do you understand? SNDK. Belch. Hike. The sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Someone from Iowa called me. You know what? I don't care, because I don't do that. 4:15. Oh, the battery's good until 4:15 a.m.? I didn't notice that before. That's what they're telling me. Bet you it depends on how much I use it. Okay. That's situated. I'm dreaming of a white Christmas, like the ones I used to know. Be merry and bright. No, that wasn't supposed to do that. Wonder why it did that. Well, okay, hold on. It might have done it. IWM, they were talking about Walmart this morning. Now look at Walmart crash. Walmart slide sales are hit by falling drug prices. Well, good. What's wrong with falling drug prices? Walmart could be a good trade today. Walmart's whining because the drug prices have dropped. Boo-hoo. Some of these corporations depend too much on government spending. SPX will probably be a trade wreck first thing this morning. There. Whoa. I don't want this one up. What's the one I want? Ah, fudge. I still ain't got this. You son of a. Okay. I got to get a new mouse. I got to do it. Snake, breakout, pullback, inverse head and shoulders, boom to the 200, ready to open. SPY. Snake, insane, same thing here. AMD's about to hit the 200, Nvidia's about to hit the 200. Apple, triple head and shoulders. And Meta head and shoulders with a triple bottom. We have 3 minutes left. We've got Mr. and Coin, Google, Riot, and Mira. I haven't looked at Mira in months. Yeah, I had a good run yesterday. Okay, I gotta relax. I don't want to start off with this kind of energy. SPX, clear. God, they're going to be cheap. Let's see if we can get the 7710s or the 7700s if they dip good enough. Oh, what was that? Something just bounced. Apple. We got 1 minute left. See if we get to the bottom of the VWAP. And here we go, 7710s. Nah, they're too low. The 7700s. 7700s. Got one. At 620, the 7700s. I'm out. First trade of the day. $6.20 out at $7.72 for the first trade of the day. Should have got 5 of them, but I don't want to start off like an idiot. Come on. AMD, double top. We got Mr. Coin, and we got mRNA. Watch mRNA. I got support level on mRNA. SPY 771 maybe today. What did I say? SPY 771. No, that ain't right. That ain't right. Let me move this over here. I got 3 platforms. SPY 767, 768. We just now hit the 200 on the /ES. We got a hammer, inverted hammer. We got mRNA. Right at first support. Rondi. mRNA just hit first support. Balandi. God, they're at 1050. SPXs. We broke the VWAP. 7710s. I'm going to see if it retests the VWAP here. Shoot, 7700s are 11. That went to 12, I think. We got 3 black crows with a tweezer bottom on mRNA. Three black crows with a tweezer bottom on mRNA on the 3-minute. We got a hammer, doji. On Myrna. Wall Street says, we can't run like this. We've got to keep it down. We're at the VWAP. Are we going to hold the VWAP? Should I take the risk? We had an engulfing candle here. The 7700s are at 1020. Now they've got 10. Okay, I'm going to bring it back up there. No, I'm not. I'm going to bring it. Previous support's right at 7690. We can't let them do this. Right now, I'm going to grab one here. They have 7710s at 530. And only, what did I get? One? Damn it. No, I'll get two. Nope, you ain't gonna let me do it, cockroach. It's thinking about it. Break the VWAP. There's almost $100. We might not break the 100. Give me, oh, come on. Let's hold on here. You sucker. Double bottom. I did grab one there. My average is 510. The 7710's at 510. And I could sell them right here and be happy. You want to break the VWAP? I don't know. I don't want to take the chance. If it does, I'll get back in. $490. Let me see. What did I say? What was my average? 510, and I'm out at 610. So off to a good start. 530 and 490 and out at 610. SMCI strong. I want people to put alerts in here. Don't be shy. And don't be shy to ask questions either. Okay. First one, in and out, 620 to 772. The next one, SPX, started at 530, added at 490, out at 610. And now we're moving up. We're at 670 right now. That's the 6710s. We just hit we're bearish because we're under the 10. So I'm just scalping these here real fast as long as we're bearish. That's on the 2 minute. Then I've got the 1 minute over here. We broke the VWAP on the /ES. That don't make no sense. Oh, it's stock trades. Pa, 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 pa. Okay. We're at 570. 7,700s, I'm moving them up. We're below the VWAP. We're bearish because we're under the 10. I'm too close to the 10 to want to scalp it. We're bearish. I'm going to try to keep this right. Yesterday I was taking a couple risky trades because we were under the 10. I'm going to flip back and forth. I need to go get an aspirin. We're at a yin-yang right here. The 1 minute's still bearish because the 10 is under the 20. I guess the jobs number weren't good this morning. We're just now starting to cross on the 1 minute. This could be a catalyst. There's 12,000 contracts on the 7700s, and the 7710s have 11,000. Mira. Moderna's still down. We got a wedge. And we got number 4. Could get a breakout here. 720. What happened here on SPX just now? It's trying. It's trying. iShares a Bitcoin Trust ETF. What is the iShares Bitcoin Trust ETF? Does anybody know? Come on, you idiots. Not you. Does anybody know? They're... Come on, give it to me. I wish they'd put the tickers on here. I really don't want to listen to their crap. Okay, the 10 is now above the 20, but still not doing nothing yet. Give me the ticker.
Market. Our volume profile study shows that we have some nodes in this area here between about 35 to 39 or so. Point of control kind of centered in our range area here around 36. Things pick up pretty notably once again around 50. So that could be another.
Ain't no help. I got a... Oh, I got a watch list for these. Okay, this is going to be do or die right here. Triple bottom on SPX. I don't know if I should have got that. I got in. Feeling like that could have been a mistake. Uh, oh. $7,700s down 12%. We're definitely bearish. We're holding a 63 on the 1 minute on the slash ES. I should have grabbed one down there, damn it. Out. I'm out. Probably going to break now. We're above the 10. Okay, 750 out of 852. Retesting again, glad I got out. $830. What? Oh, 750. I put a sell order in at 840 and got out at 852. I canceled 830 because I thought we were going to go back down again, and then when we went back up, I put it back in at 840. SPX. That's how you do it. Got an engulfing candle? Batting 100% right now, so I got to rest. I've scalped all these under the 10 today. In and out, in and out. I don't have a confirmation that we're bullish yet. Till the 10 crosses the 21 and holds its ground. Moderna had a little pop right here out of the wedge that I called. Moderna. There they are. 3 black crows on Moderna. We got a wedge on SPX. 3 trades, 100%, 450. They're at 630 now, the 7700s, 620. Go.
Are you there?
Are you there?
Hi, thanks for calling back. It's Michael calling for the Police and Trooper Support Pack.
Yes, sir.
Our search community are growing right now, and we need. Are you still there?
Yeah, I'm still here. This is not spam, is it?
Sorry. My name is Michael. I'm calling for the Police and Trooper Support Pack. So
Yeah.
can we count on you to return a small contribution for the drive?
Where do I turn it in at? Up here at the police
Well,
station?
that's okay. Most people are helping out with $35 or $30, and some are helping out with $25. Which one is comfortable for you?
I'll give 1,000 up there at the police station.
Police and Trooper Support Pack is a super PAC. More information can be found on our website regarding the candidates and type of legislation we support.
Yeah.
So can we count on you for a $25 contribution?
Yeah, give me the website again.
You know, that's a really good question, and I want to make sure I get the answer right. So let me refer you to our website, www.troopersupport.org. So can we count on you for a $25 contribution?
Yeah, I'll turn it in there. Troopers.org. Okay, thank you.
Okay.
Oh Lord, won't you turn me to Mercedes Benz? I'm watching the 7700s for double bottom at the wick. We've got a new low, and I am gonna go. I'm gonna grab one. I grabbed one. We'll see if I got. If not, I'll have to get right back out. I'm in the 7700s at 480. $7,700. Oh, 7,700. Where are you? Don't want to do it. 3 Black Crows. 7,700's at 480. If you don't feel comfortable, get out of it. This is risky. In other words, I think I might have got them. Come on. Come on. Danu, Ben now. You son of a gun. Ah, you stupid. try to get greedy. I couldn't get what I wanted. So I'll just do that. 12%. Give it to me. Come on. Damn it. I screwed that up. I was in there good. $480. I got out. $480 out at $550. I tumbled around and screwed up when I could have got 580, 560 or 600, $6, 620. But I added where the numbers are, the order. I put the price in the orders. I did a limit order. It's always good to buy two and sell them at the market. I'm learning that because I'm fumbling around trying to put the price in the, if I just get one contract. Now this is a fallen wedge, kinda. Yeah, peddler sticks. Could have got a lot more out of it. Not a lot more, but more. $480 out at $553. Now they're at $6. Piddly. Yeah. Mama says it bees like that sometime. That's a bull flag. It could be a wedge. Yeah, I'm going to call it a wedge. Because I can. Now they're at 620. Now if this thing breaks, boom! One, two, three. Come on, bring her down just a little bit more. Give me some good price. We got a hammer right here. This is bullish. And then we're squeezing. That's on the 2 minute. And we still got the VWAP ahead of us on the /ES. So it's kind of risky until we break the 20. But right now you're squeezing, so you don't know. But we have a 1, 2, 3 at the bottom, and I'm tempting to grab one. Right about here. Okay, we got one at 490. The 7700s. Make sure I put my price right there. It's still bearish. We'll just hold on to this one and see if we break out. I'm still bearish. $7,700. I mean, what I'm saying is I'm still bearish because we're not above the 20. We're bearish. It's having a hard time. Down 220. SPY's got a double bottom coming in. The Bears are here. They're coming in. IWM is at my support. We're at resistance. I had to get out. I just can't chance it. I mean, I got out even, or I got out with $60. $4.90 and $4.30, $4.60. Yeah, I got out with $60. Whoop, whoop, whoop. See that? This is what I want to explain to you. We could still break out, then I'll get back in. But I got out. I got in at $4.90, another one at $4.30. And I got out at $4.90, that gave me $60. So when you're in trouble and you see a resistance line, don't take the chance and think it's going to break when the 10 is under the 20. We got to wait for that 10 to get above 20 before we can really start going long and big. So that gave me a gift. That candle was a gift. I was down $300. And let's all have a prayer for Bug and his wife. His wife's been battling health issues. So we're going to have a moment of prayer for her right now. Thank you very much. Now we might start getting a little crazy here. So everybody put a prayer in for Bug's wife. This could be the catalyst. I should have held that. Damn it. Again, I'm in close to the VWAP here. That's $400. I felt strong. I should have held it. Now we're bullish. Oh man. That was a toughie. I mean, now we got two engulfing candles, so I got to wait for the pullback. I'm kind of nervous to jump in right here. We're at the VWAP. When we break the VWAP, then I'll definitely be more secure about the trade. So far I'm at 100%. $578, and then my bad Monday. Okay, we're retesting. The 10's curling up. I grab one. Now we want to stay above this here previous resistance. And that didn't happen. So far, it might have happened. We're squeezing again between the 10 and the 20. This is okay. We broke out of the wedge. We retested the previous resistance. I'm just thinking this could be a catalyst. I'd rather have seen 3, but these are 2 big engulfing candles. Come on, do it. Hold it. Playing with fire, Bobo. You're down $90. Have you ever thought about selling? No, not yet. Breaker. And now. Break it. Break it. One minute looks very cool. 1 minute looks good. The 2 minute don't look too hot. Come on, give me 10. We got an inverse head and shoulders. We got a triple top. So that's got to break. That's a hard resistance. Quad top. And I don't know if it's got the catalyst to do this. 7,700 calls at 470. Blanket. This will be a triple top. And we've already had 2 shoulder lines on the head and shoulders. I'm out. I'm out. Watch it break. I'll get back in here if it does. What'd I get? I got 524. So I hit a resistance. I hit a wall. You got to make a business decision. If you want to take the chance for the triple top break, which right now the 10 is still below the 20, so I don't want to take that risk, right? Then when that 10 is above the 20, that's when I'll stay in strong. Got me? I'm 100%. You don't want to take too much of a risk until we break. This is a bull flag. We could eventually break. I feel like I'm on a hit of speed. Coffee. Well, the market is lazy, but I am still here. I got a bull flag that really appeared. Took the trade on 3 black crows, 2 engulfing candles never get old. The slash ES at the VWAP, will it ever stop? We need to prick this trend line. The stock market will be all mine. 3 white soldiers out of the gate. I just can't wait. As I prepare for the breakout, SPX. Okay, the 10 is finally crossing. So I got to grab one. We got a break. Come on, baby. Do it. He wants to so bad. I really want to jump in this thing right now. Uh-oh, folks. Prepare ye in the name of the Lord. See? Now, don't chase. Wait for it to come back a little bit. And get a good price. Or it could just go ahead and bound. Then you got two resistance. You got resistance levels. There's probably still some bears out there stuck in their trades. We're at the VWAP on the /ES, so you really can't jump in it right now. That breaks, then we're off to the races. I'm going to grab one. This could be just a big fake out. That's probably my mistake right here, getting back in it. But we're bullish. I got 560, the 7700s. No, you should not press the deafen button. Who said yes? Who said yes? I won't tolerate that in this room. I'm up 17%. I'm out. Randy, was that you? You would never answer that poll. Woo! Yankee! Did you see what we did there, Yankee? We waited for it to cross, right? Or did you get in before? I got in at 560 and out at 681. You waited, good. Discipline. Wait for the right time. Don't take the risky trades like I do until you can really read them and get that feeling. That's a real good trade. Actually, you could call it a day. $560 to $681, 130 bucks. We broke the VWAP. I mean, that was a good trade, I think. I'm just taking, you know, I'm not going in a lot of money on these trades. I'm up 750 bucks. Batting 100%. Wow. Okay, I'm going to get lunch ready. I'm going to take a little break. Now, we're bullish, so if you're not in this trade, set an alert above the 10. I'm about ready to get back in it. I really want to eat. Food. And it looks to me like Magnificent was outvoted there. They love my music. And I know you do too. Livid Goose is talking. What's up? Hello, sir. I'm just, oh, here we go. We're right at support at the 10. Been a stubborn market today. Maybe this was just like a relief rally. For people that were stuck in the trade. We're coming down 76.83.39 right now. If that holds, we'll retrace back up. I think I'm gonna grab one right there. I'll sell it. I ain't gonna mess around. Because put a tight stop on it. If you're not comfortable, take a small loss. Right now I'm down 20 bucks. I'm even. But I think I'll grab one if we hit the 20, and then if that doesn't hold that previous resistance, I'll get out. Right now we got a doji on the /ES holding up to 63 on the 1 minute. I think the bears are kind of come on, you sucker. Now you're back at the VWAP right there. We're above the 10 now. To get a big old fat candle here. Let me know if you get out. I'm looking at the there we go, /ES. It'd be nice to take some profit here so I can have lunch. And I will do that. It's a 10% trade, 11%. I'm out. Oh. Yeah. You got a triple top coming up. and a Head and Shoulders. You understand why that was on the 2 minute, why that's strong? Because we retest, we always retest. You see the opening price where that candle is on the 2 minute, that head? That was like a confirmation. That's called a pivot point in that their channel. So if we stay above that candle right there, we could get 77.11 by the end of the day if the bulls come in. I'm out, so I'm going to go get something to eat. And I'll be right back. I'll let you keep on. It's just not a, today's not a, what am I saying? You gotta be careful. Lunch lady's cutting the AMD. So far this week, I'm up $1,900 in the challenge. I haven't took a personal trade yet. $1,900. I think I can have a green day here on out if I keep trading the way I am right now. I'm very disciplined. This is where you want it to hold. Where it created a symmetrical flag. Oh, we did. And a Head and Shoulders. Yep. Yep. You have 76, 85, 43 has to hold right there. 19. Yep. I'm looking at SPX and /ES. I'm using the /ES as a major catalyst. And at 63 EMA right now. And then we've got 76.99 for the 200 SMA on /ES. And we could still pull back to this previous resistance here in that bull flag if this don't squeeze. Still okay right now. But you're on the threshold of dropping 3 or 4 points. 4. Now if this thing breaks a VWAP over here on the right, boom. You got a triple top. 76.92.20. I want you to get that gut feeling. If you want to take profit or not. There it is, baby. Yeah, it's called divergence, volume divergence. On the 1 minute, you get 3 candles back, you had a good little pop. Boom, baby, take it. You're above the VWAP now. You got to respect the VWAP on the /ES. And you're at a triple top right here. The triple top is bearish. Man, I should have held that one. Are you in the SPY? Okay. Excuse me. You're at the 200 SMA on the 2 minute on the SPY. That breaks 768.49. Maybe. Yeah, 768, 767.70. Yeah. Great. Did you get it? Yeah. Okay. Hell yeah. That was good. Oh, fuck. Very good job. You getting it? Are you using the same catalyst I'm using? The 10 and 20 and the 200? Okay. Yep. Yep. Snake breakout. He's talking about the snake breakout pullback boom. Snake. Yeah. Still in it. Spank. God. You don't do that. Tape's looking delicious. Now look at the volume there on /ES. This is called divergence. You have a volume squeeze. Each candle is lower than the other, and the price is going up. It's like the opening up of the alligator mouth, and then it chops down. We got a symmetrical flag on mRNA. Getting ready to squeeze. Has to break the 142. Now you're back at support. Okay. We're at the VWAP, 3 black crows. Where's my... It's 710. I got 680. Same. Oh. No, 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 no. Don't do it. I want to stay in this here. triple bottom. Three black crows on the 2 minute with a tweezer bottom on the SPX. We got a head and shoulders on the SPY on the 2 minute. We'll see if the charts are clean today. Right there, that has to hold right here. We're at the 200 on the /ES. I was watching watching a guy that had a lot of experience trading, like 45, 50 years. He gets paid going around teaching people how to how to trade. He was an institutional trader and got multi-rich. So he said that all the institutional traders trade with the market makers with the 10, the 20, and the 200 SMA. And so I started watching it. Mine was kind of busy. People weren't following me as well, so I figured I'd simplify it. And I'll send you a video here of the guy. And we've got to break the VWAP on the /ES. He trades it. Yeah, 5 minute for a lazy trader, 2 minute to get in and out of these trades within 2 to 3 minutes, and the 1 minute is too busy for him. And I feel, shit, I love the 1 minute. I'll use his strategy and go back and forth. But we're at 10, it's got to stay above the 20 right now. Almost just wanted to take $100 loss there. And we come up and /ES hit that VWAP. It stopped. So if it breaks it, boom. On SPY? Yep. And we are now at the VWAP. That's on the 5 minute. Let me go to the 1 minute. And still holding that shoulder line. Okay, now we're retesting the double bottom here. I added 2 more. Break. Okay, we're back at resistance /ES on the pivot point. Break second. I don't know if I got 5% or 6%, but I'm hungry. So I got out. 530. I had 490, I think, 495. So I got 120 bucks. I want to make sure that that's right. Let me look. It's almost too busy. Yep. Yeah. Now you see you got a triple bottom with a higher low. You got two-headed snake, or you got an inverse head and shoulders coming back for the third time, a triple bottom out of the snake. Here, let me show what I'm talking about. This is the chart, YouTube. So, you got a triple bottom with a wick, the higher low. You have an inverse head and shoulders, came down with a higher low, landed right on that. And 1 minute. This is on the 1 minute. I want you to switch back to the 2 minute and the 5 minute when you get done with this trade, and relook at it. Clean it up. Now, when I'm in doubt and I'm green, I'm getting out. And I'll be back. I'm going to go ahead and get lunch started. Almost $1,000 today. And you can adjust that head and shoulders too as it comes down. We're at the 200 on the SPY. So this has to hold. This has to hold. On the 1 minute. Yes. That'd be a triple bottom, kind of, or an inter-day double bottom. Sideways channel's not very big today. $2. That's it. That ain't much. Trump administration to back U.S. mineral project with $500 million in grants. We need to stop spending. We're at 40 trillion, I heard. That might be weighing in on the market too with these fat cats. Yeah. Well, yeah, after that big run. Yeah, I said we'd pull back on the SPX on the 2 minute. We're pulled back to that previous resistance, and we could bounce here. You see what I'm talking about, people? Now look at this. I want to also show something else. See this close right here? That double bottom from yesterday? That's a hard resistance to break. So you want to put a trend line all the way across that and call that your resistance level. Previous double bottom becomes a hard resistance. $77.0187. I'm gonna get my. I'll be back. I gotta do. I can only when my tummy starts talking, and I'm trained to eat at 10, and it's 10:30. You don't want to get me grumpy. I'll be back. Reversal. Going back to the VWAP. In case you all are wondering out there, this is a silver, what do you call it? Mexican hat that I bought down in Cancun. When I was at the Grand, what was that called? Grand Princess Sunset, Grand Princess Sunset, Grand Sunset Princess, something like that. Resort. Now you're back at that pivot point. We're bearish because the 10 is below the 20. So it's got to break the 20. So you're actually bearish right now. And we got to break the VWAP. Now on the SPY, we still got to break the VWAP. But that's two good soldiers and inverted hammer with it close to a tweezer bottom. See how it runs the 10? Came back and retested the 20, and then boom. Then we broke two-headed snake. Or that could be another head and shoulders because of all these wicks. So as it retests, that's your one support, and then one more crow would be your second touch with the body. And I'm not going to trade because I'm going to cook. see how much battery I run. Two of us, man. Okay. 3 black crows. On SPY, we got to see what this candle forms here. I'm going to give it a shot. No, I can't. Let me see where they're. Option chain. We're going to bring them up. 60, 76.90s. Clear. 76.90s. And I got one. $76.90s at 460. SPX. You think I'm crazy? Well, we're on top of that previous resistance. I'm up 8%. Or was. You got a double bottom coming up. Yeah. Oh. Oh, on SPY. Yeah. No, I added one. 4.25. Should have got 3 of them. Another one. Blanket. We're bearish because we're under the 10. So any kind of profit I get here, I want to get out. We got to break that 10. Ooh, no. Don't do it. Coming close to that double bottom. Double bottom. We've got a wedge. Bears are in control. Come on. Frickin' pencil there. We've got a fallen wedge. Get back to 7,700. If we can gain respect off this 10. We definitely got a fallen wedge on the SPY. Oh boy. Right when I want to add, it bounces up $50. We're squeezing between the 10, that's on the 1 minute, between the 10 and the 20. Come on, you sucker. Break. I'm frickin' green. More. Do it! I take 10% any day. When I'm in 4 contracts, this could break out. And if it does, I'll get back in it. I got out it. Come on. Got out at 420. That's not bad. So I had 283. 4.20 minus 2.3 is a no. 420 minus 3.83. $37 times 4. $150. I did it. I'm still 100%. He said, crowd says, I don't know how he does it. Well, I got proof. And I should have bought more. First entry, 460, 390, 360, 320, out at 420. So just one at a time. Not really overdoing it. And I wanted to get 4 more. And the thing jumped up $50 right when and this might break out. If it does, I'm back in it. Times 2. Man, I made this soup. I'm going to eat it all, but I made it a little bit too hot with too much pepper. It's not my best taste. A little spicy. Someone might like it. I mean, it's not too hot where it makes your butt burn. Live it, I need a new song. Well, when you take care of your mother, then write me a new one. Okay. Don't do it now under tension. You don't like music. He doesn't like good music. I don't know what Jews listen to. Probably pop. Liberal music. A little bit of Bonnie Ray. Get ready, prepare ye in the name of the Lord. You love it? I'm being funny. I'm going to see what kind of music Jews like to listen to. I don't know. Jews like what music? Elvis Presley. They like Little Dicky. That's what it says. Yeah. Israel songs, someone. Israel Hebrew songs, a beautiful Jewish music. Treat Jews Better by Raka Raka Ali. The Song of Solomon. Oh, here's a song. I Love the Jews. I'm getting ready for this thing to break and jump back in.
And they're held together.
I love the Jews.
I love the Jews. I love the Jews.
I love the Jews. I love the Jews.
I love the Jews. I know a Jewish person, he looked just like you. I love the Jews.
I love the Jewish people.
Doing what they do. I love the Jews. Man, I love the Jews, cause I love the Jews. I love the Jews. I love Jewish people and the things they do. I love the Jews. I know a Jewish person, he looked just like you. I love the Jews. Jewish bitches twerking, doing what they do. I love the Jews.
I love the Jews. Oh, he said something. Man, I love the Jews. Very slow day today, and I'm up a grand. I think I've got this. Go ahead. It's a double top. Could reverse. Double tops are bearish, so it's got to break that top of that M before it becomes bullish. And that M will turn into a W. Triple top breakout. This is my average day, people. When I come in here, this is my average day, $1,000. Trading in my account or trading, I'm just trying this new strategy in this account because I don't want to lose, but man, I'm getting 100% days. 82%, 94, and now 100%. Yesterday was 100%, and I made a foolish play at the end of the day. I do that because I can trade the lotto. The SPY depreciates in the afternoon, depreciates a lot more than the SPX does. I feel more comfortable doing that. Or unless I trade the next day out, I'll trade the SPY. Once we hit 11 o'clock, I have to get closer to. You have to get closer to the money, or in the money. If you trade the SPY. If you get out of the money, then you got to be cautious. Yeah. Yeah. We're getting ready to break. I still made $2,000 yesterday. $3,000 altogether, trading the way I did. One in 1,200 in my personal and almost $2,000, 18 in the challenge. Started in the hole yesterday, 300, and boom, here we go. We're at the slash ES is at the 63. We got 3 walls ahead of you, the 63, the 200, and the VWAP. So I'm not completely bullish yet. Not until that 10 arches up. And then you got a chance to like today for a little pullback back to the 20. I think eventually we're going to have a breakout. We got a head and shoulders, and we got the 10 getting ready to cross the 20, but we're still bearish on the SPX. I guess I could be talking SPY here. SPY, we got a megaphone, which is a bear flag going down. and it's breaking, and the flag now is a kind of turning into a symmetrical flag. So this could possibility of going back down if we don't break out with these higher lows right now on the 2-minute. And we're still bearish because that 10, you see that 10, how that wrap 10, how sweet that is right there. And then we're under. You can still break out. I ain't putting too much money in these SPX calls at all. I'm keeping it under 1,500. And many of them I traded about 4 or 500, 3 to 4 or 500, just in and outs. Now we're going to find out any second. There we go. mRNA at a triple bottom. I think the next time we come up to the 63, we break it. And it's 11.17. Still got a big wall to break. And the 10 is above the 20 now. I think I'm going to move closer up to the money. 76.80s. What's that buy on? Oh, QQQ. Put. Damn. It means put. We're still at the shoulder line of the Head and Shoulders on SPY. Do. Sloppy. We're at the bottom of the megaphone out of a snake. So I'm going to give it a shot. If we break the 20 here. We're squeezing on the 1 minute. Oh, wow. That was 80. Oh, shit. Dadgummit. I didn't jump in it. That's $160, $200 right there in that candle. I knew it was getting ready to. Today's been kind of funny. It could easily come back down and hit that 20. That or I jump in it and then buy the dip. That sucked. Right when I was getting ready to push the trigger. That was a bummer. Well. That was called that out. Oh. Every time I jump in here, I regret it. So I'm going to wait. Man. Now we're going to respect the 63 on the 1 minute /ES. Get ready, we're crossing. I'm gonna grab one here. Let's see if we got 68.80s at 620. Uh-oh. That didn't hold. That didn't hold. Down 11%. Reverse megaphone. Okay, I'm even now. Kinda, almost. Break. $6.40. 13%. I'll take 10. Let's see, I probably didn't get what I wanted. 6.10. Oh, it was $100. Still in my personal. Yes. Nice. That's the way you play a megaphone. Nice. Nice. Were you nervous there, Lizard? Wow. There I go again. I'm telling you, that's $1,000. Or $800, $900, that's $1,000. Right to the 200. That's beautiful. Snake, fallen wedge. Now listen, I want you to all listen real good here. I'm going to clean this up. I'm going to give a lesson. So this is the 1 minute. I was trading both the 1 minute and 2 minute. Chart patterns, moving averages, and being in the now. So on the 2 minute, we had a double bottom, triple bottom on the 2 minute. A triple bottom is a bullish pattern. It's bullish. Your odds of taking that trade are they up to 80% for it to bounce. What adds the other 10 and the other 10% is the snake. So we have a fallen wedge. They don't always have to be a bull flag. When stocks pull back doesn't mean they're bearish. They set up in flags. So this is a fallen wedge. I tell everybody, hey Jim, I remember you saying wait for the pullback. So we had the breakout of the wedge. We pulled back. Jim, I also heard you said wait for a pattern of some sort. So we had what you call a megaphone pattern. Breakout, pullback. I got to keep watch on this because this could start to break out pretty big. Now they always come back and retest that previous resistance. So this is called a megaphone. If you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. 1 body, 2 body, 3 body. 1 body, 2 body, 3 body, 4. Sweet spot. So as it started, I jumped in the trade here and added on here. Boom, 2 engulfing candles is a bullish indicator. Sometimes it's 3 white soldiers. So that's snake, breakout, pullback into a megaphone. I mean, that was beautiful trade, beautiful setup. And that's on the 2 minute. How clean it is. 1, 2, 3, breakout. 1, 2, pull back, boom. Maybe to a double top or to, and you got a head and shoulders right here. So you want to draw that head and shoulders line in there as a trend line. Came up and broke that head and shoulders. The right time. We're at $10 now. $8.50 to $10. We're on a roll. We're at the VWAP, so there'll be some hesitation here. On the /ES, you see that, David? I want you to put that to the side, that /ES, and use it as a guideline. Use the VWAP on it. That'll be your pivot point. That breaks, we go much higher. But we can always come back and retest the VWAP. And the same with the SPY. It's just a little bit different. Now we're at the 200 on the SPY. So what do? You scale out. Unless you think it's going to break. And we are above the VWAP. So that could keep you in the trade. Or you can make a business decision. Either way. On the 2, I'm sorry, I was looking at the 2 minute. Yeah, turn it to the 2. Okay. Man, it's starting to get clean. Right to the head and shoulders on the SPX. Boom, perfect. Two collide. I'm going to bring these down to this. I don't know. I kind of like these high price ones here. Boom. Since I don't want to break it yet. Whoa, 76666. The devil's talking to you. At the 200 SMA on the 2 minute. The devil has something to say on the SPY. two white soldiers. Will it hold? I've got one at $8.10. Let's see if it holds. Oh, nope. This could be my first red trade of the day. Unit 810. The 7680s. We pulled back to the previous resistance. We'll see how clean the day is here. Nope, 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 nope. Got a 760 average, 710 and 810. Having a hard time. Hold it. It's important you hold. This will keep the day clean if it holds. Still iffy. You got a nice hammer there off the 20 on the 2 minute. You're holding up to 63 on the 1 minute on the SPY. Didn't give me a headache. Now I'm green. Come on, break out. Oh, you dog. Wow. That was like a say, no, not yet. Boom. It's not it's a squeeze, but it's not a real tight one. It's only coming between moving averages, not in a chart. I'm up 5%. Oh shit, I didn't sell them both. Must have made a mistake. Damn it. You fool. I'm out. I didn't put 2 on there. I had a good price. $8.70. I could have got $8.70. Oh God. Man. Bitch. You're constantly making mistakes. Gotta keep. You can't measure twice and cut once. That used to be one of my biggest rules. Measure twice, cut once. Oh, I was going to show you this. I already screwed that up. I could have had, what, 40 more bucks. Buy one and then add on if it goes down a little bit. If you think we're in a channel, or right now we're below resistance. So I got to be patient here. Oh, mRNA pulled back 50%. Fibonacci. me see. Personal account. We're at 480 in the option now. Oh, coming back to the previous resistance. Double bottom coming in. Let me see. Option chain, $5. $76, $72.50 maybe, or $76.75. Should I buy one now? Pay later. Take a big drink of water. And go get another glass. So far I'm batting 100% still. The 10 is crossing down over the 20. I'm going to grab one here shortly. What was resistance now becomes support. And that'll be almost a quad bottom. So I'm going to start my powwow here with one. Better make sure I fucking got one of them, yes. I end up buying two. I'm going to go, what? The what? The 7680 calls in at 480, and it's bearish. We're at a shoulder line's the reason I took it. And they could easily come down and hit that.
'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it could easily come down and hit that. 'Cause it co
And we're under the 10 too. It's another reason that we're bearish. But we've got a support here. So if it doesn't hold, I add on right there. $3 dip. Or I get out. That could be like 32% if it keeps going. Jim, you're down $80. Have you ever thought about selling? No. I can't. I refuse to. Here comes the quad. And I'm going to add. No. There it is. Now, this is going to be the determination if I get out or not. New low. We're at the bottom of the megaphone. Spy busted support. /ES has an inverted doji, almost a gravestone. I don't want to go any deeper. Oh, that didn't like that. I think it's a bottomless pit now. QQQ has a triple bottom. On the 2 minute, we had 3 black crows with a tweezer. break. Snake breakout. Double bottom high or low. You're bringing her down. in the SPY. Pre-market lows. More descending. Pretty good crash right there. Retesting previous resistance. Right now the 9 EMA is a resistance level. mRNA bounced off the 50%. They're shorting the heck out of this. Another fallen wedge. And we're still out of the snake. This is looking not too good right there, that's for sure. We keep bringing it down. Still going down. SPY, I said 750 this week. We got 14. We're at a double bottom on the SPY. We've got a wedge right here. SPY's about there for a double bottom. New lows. Yep. It's a new low for the SPX on the 5-day. Whoops. More space is. gonna do, Bo? What you gonna do? 76 70s? If we break? First, well, I'm not sure yet. Not sure yet. Ah, I should have got him. That would have been a good one right there. The 76 70s. We're at resistance right here to break on the 1 minute. Did you get the double spy? Yeah, that would have been a pretty trade. Did real well on that one. Shit. I'll be right back. Go get me an ice cream. No, get me some water. Well, we got the breakout. After a sell-off like that, geez. '76 70s. I mean, 76 80s. We want to get to 76 70. We're at a hard resistance right here. No, don't. Market makers are having a heyday. Break it. There's a big old fat candle. Give me another one. We're coming up to the 63. It's kind of a tough decision. $76.70. We're in a bad spot right here. Might as well just go on up. The 10 has finally crossed the 20. I don't know how much catalyst that'll be, but big old ugly snake. kind of lost its mustard once it hit that 63. We've got a head and shoulders on the SPY on the 2-minute, kind of like a fallen wedge. Three black crows on the 1-minute. Snake breakout pullback, higher low. Gummit, new low. I don't know. It's 76.70s. They're bringing it down big time. They just broke a triple bottom. I don't trust. Bassett signals Treasury buybacks could exceed $4 billion. Still short in the market. The 76.70s have dropped a lot. Cool. Spy what you gonna do. What you gonna do? Still shorting it. Now I'm looking at the 76.60s. I'm sure I don't have nothing. Remember the great and awesome trader who was amazing and magnificent? Oh. Oh. Jimmy had 750 this week. But I don't know. We still got tomorrow. We got Apple has pre-market low support. I don't know if there's any coming back from this today or not. SPY trying to hold 765.54. Livid Goose says. Yeah, I noticed that. Would something if we got one heck of a return here. You got a volume squeeze or a continuation down. Walmart down 10%. SpaceX down 5, almost 6. CrowdStrike. Joby back 745. New lows. That's pretty nasty. We're at the 20 on the /ES. On the weekly, on the daily. This could be it. Now the buys are coming in. There's another fake out. Pretty hardcore. So the U.S. bond yields are surging again the day after best debt buyback plan. Meta pulled back to 540. We got ugly day. A lot of support levels. Meta's what got my eye. Still bearish. It's now 1:30. No sign. Viagra. Uh-oh. Here we go again. Getting ready for another squeeze. It's just a boring day. Another fake out. Bassett signals Treasury buybacks could exceed $4 billion. Don't trust both sides. We're kissing up against that 20 again. We're going to find out if it has any faith here. I'll be right back. Did SPY get to 750? No. Nope. We got a double bottom, high or low. breakout. We got a triple bottom here. And it is 17 minutes to power hour. What's Tesla? We're above the cloud on the EMAs. Tesla's under the 200. What are these banks doing? 62. Banks are all down. Still bearish on the SPY, but we're close. We're going to break out. What else is on my mind? Intel. Goldman Sachs had a real... That's still up above 1,000. Morgan Stanley. This ain't breaking out yet. SPY. I don't know if I want to or not. SPX. Sticking its head up out of the water. Apple down. Magnificent Seven, all red. Biggest losers: Tesla, Meta, Google, G-O-O-G, and Google. They're all down pretty good. All but Nvidia, it's down $1. Congratulations on the support levels for the SPY today. Is Canada giving us a problem? I want to buy something in my personal account. I want this to break so I can really boom. Got a symmetrical flag. Snake, breakout, pull back, head and shoulders to the downside. Well, Uh-oh. Something just shot up. Somebody pushed it up a little bit. Somebody pushed it up a little bit. Unbelievable. That's what you are. Ooh. Coming up to a double top. It's been very cowardly all day here today. We're at the 63 on the /ES, so that's a blotch. I wish that 63 was up here. Don't know what that is on the SPY. VWAP's way up here. Seven 65697 has to break, or the 63. Trading View does in Canada. I've seen sell-offs like this before where we have a nice bounce at the end of the day. We got 9 minutes to power hour. And I don't know, the news on Bassett and the market reaction on the bonds. Level 1. Woohoo! Magnificent. We're above, the 10's above the 20. The cloud's trying to change for the first time. We're above the 50 SMA, squeezing. We have 6 minutes to power hour, and the crowd is growing restless. I want it to break the 63. Today's upgrades was Etsy and AMT. Today's downgrades, Merck, MRK, and TJ Maxx. That's going to piss them off. So now it's the debt that the market's talking about. Nothing else would work. Now it's the debt. 40 trillion in debt. They're always going to come up with something, and that would bring another worry. And they never worried about debt. But now all of a sudden they're worried about it. Got 3 minutes to power hour. I can't wait to see this reaction in the market. Especially with this sell-off like this. Usually we have a pullback here and some volatility, but we've already had it. Yeah. Jesus. The market is frustrated. I think Billy Bragg, the 10 is still above the 20. Well, these each one represent a month. So it's kind of like a monthly support. We've got a tweezer here on this one and this one. $74.79. Now, there. On the daily, we're pretty close to, oh, we got a gap. This is that whole big, well, I thought it was a little farther back down than that, but that's it. That's the run. We got a gap fill. Oh, that was a pretty good spot. And it's right at the 20. I like that. 5 minutes into Power Hour. Yeah, don't be teasing us again. We're at the 63. On the /ES. It means time for puts again. Unless this is it. We're up back. No squeeze. No squeeze. puts. Now, if this holds here, this could be respectful. If not, it's going to go back down. SPY, same thing, it's bearish on the 5 minute. Triple top on the 2 minute and triple bottom on the 2 minute with 3 white soldiers. I haven't traded. Seems like forever. Baba CEO. There's some real good market makers on this thing today. Every time I call resistance, put comes in all day long. It's now 214. They're good today. They're very good today. Don't even tease us. Don't be teasing us. It's teasing us. And it's now 2:16. Teases us. Triple top bearish.
On the Dixie crude oil, as I mentioned, quite the story today as we have got Brent in the 90s. We were knocking on the door of about 90 on New York crude earlier today, but we're off the highs. We're still trading around the mid-80s range. Bitcoin, as we know, the story there has managed to get back up above that 70,000 mark. Obviously, a lot of optimism around that trade right now and the crypto-related stocks as well, off the back of what we've heard from Mr. Trump about a potential Clarity Act progress here. It's been interesting because just looking at some of the analysts, what they've been putting out today, I mean, the chart report with some stats earlier today that positioning had moved away from energy, gold and things like crypto, but the recent price action is starting to pull investors back in now. We've got the 10-year yield, as I mentioned, at 470 right now, with, of course, that 30-year very much being eyed at the moment, 523 as we stand. So that's a quick check-in with the markets. We've got less than an hour to go, obviously, but let's bring Marley back into the conversation and turn our attention to this week's retail earnings.
Obviously.
CEO of J. Rogers Niffen Worldwide. Dan, always nice to see you. So Walmart, Interesting. Obviously, the headline was the slowest sales growth in 6 years, which makes your eyes pop. But then if you look at the numbers, they weren't that bad. In fact, the analysts have been saying they look pretty strong. Is the reaction we're seeing today got to do with the valuation, perhaps?
Well, for sure. Everything was good but store-for-store sales, right? They had great growth online. They had great growth in advertising. They had great growth in all those ancillary areas that have better gross margin. And they had great earnings numbers. What they didn't have was great store-to-store sales. But we know it got knocked down by about 125 basis points just through the pharmacy part. So had that not happened, they'd have been very close to what we expected their sales to be. So I looked at it and said, well, yeah, they've got a 40 multiple. Maybe that's the problem, but it's not so much, not their performance. They're still the best retailer in America. They're doing a great job. They're gaining market share. Their 2-year stack on numbers still looked great even with that slow number today. Still better than Target's two-year stack by 600 basis points. So yes, they're a fabulous operator. They've done a great job. They're giving some of the money back to the customers. In
Exactly what I said. Pull back.
And it makes their
Been a channel here. And nice little channel. Four trades. EPA is in consultation with the DOE to expand gasoline supply to lower prices at the pump. Really? August 21st, August 20th. What the hell? I'm afraid to even try it. It's 226. There are a few conservative women up in Canada. Bearish. The bond market is going to burst the stock market bubble. Oh, this is really, all of a sudden they're reading scripture. Rising yields threaten everything, especially overextended equities. Yikes! When it comes to the stock market downturns, listen to the Bible. Even if one is coming, of that day and that hour knoweth no man, not even the angels which are in heaven. But one is surely coming, and the unraveling of the long-term bond market is raising the chances that one is imminent. It is already absurdly obvious that we are in a massive stock market bubble. Former Federal Reserve Governor Bill Dudley I don't appreciate Wall Street reading scripture. Be careful. 1, 2, 3, 4, 5. Will we take a nosedive? We're back down. Every time we hit a resistance, we hit a support, we bounce back up. But this is number 5. $200 SMA. Reject. Reject. Rejected support. Number 5. Take a nosedive. New low. Oh yeah. Just like clockwork. 2 to 270. $290. And we're at the 63. Tonight's Wednesday night. Or what is tonight? Tonight's Thursday night. In Putsville again. We'll have to start being more bearish. What is your channel telling you at that time? Market wants to burst the bubble. It's about bursted mine. Unbelievable. More drama. I know it. I think we ought to give them what they want. Well, 13 more minutes left. That's the longest channel. Almost 2 hours, hour or something. Hour and 15 minutes. mRNA back to that 50% pullback. Apple down. We have 8 minutes left. You can blame August. And I blame the fat cats want to definitely bring this market down because there's so many in, like that Burry guy doubled down on puts. I ain't going to take no trade for the rest of the day, that's for sure. Well, this is the down day for sure, right? We could go down a lot more, I think. I gotta do some serious charting tonight. Oh, I need to go do something. Oh, shoot, I forgot. What's this? More drama. I think the ladies' restroom sink is out of order. I'll check the batteries tomorrow. It just kept spraying water and wouldn't shut off. Also put a new flush handle in the men's restroom downstairs. I noticed the symptom yesterday. And today it ran for like 5 minutes and wouldn't shut off. All right, well, that's it. What a day. I've got things I got to go do, so I need to put on my shoes and go get it done. That was an ugly ending of the day, and I think it's all because of the bond and the bursting of the bubble. So we'll see what happens. September, I said, was the month to remember. We'll catch you later.